So yes, again, Happy New Year to everyone. And I feel, very happy to have you guys in my midst, right? There wasn't a lot of you that were selected, but as you guys can see, the group is fairly small. There's around, I'd say, 250 of you guys that have actually been selected, right? And that's due to the fact that this year, right, I really want to pay attention to you guys, my students, right? I want to ensure that I can respond to you all whenever you guys send me a message. And I need to see more success stories, right? I need to see you guys, thrive and eventually become better than me. That's the goal, right? So yes, this mentorship of this year, which is so closed off, right? We don't advertise anywhere, right? If you're here, right, it's just because you should be here, right? So that's the main focus of this year, to, allow you guys to grow. There are some, there has been some speculation, in regards to leakers, right? So people are out there, and this video will probably be leaked, right? Or shared with some people due to the fact that, people have found a way to hack Telegram, right? So we'll be working, in a way whereas we can just do the live streams through WAP. That's the goal. But if not, we'll do it here, and the videos will not be posted here. They will be posted to WAP. Anytime we have a chart that should be posted, it will be on WAP. Anytime we have announcements, they will be on WAP, right? So the main purpose of here right now is just the live streams, right? There is no sensitive information, that will be posted here. And with that being said, we're going to go into the things that you need to succeed, right? The main things, right? And it's not a lot, right? And I am trying to not overwhelm any of you, even if you're brand new, right? So the first thing to understand is that here, while studying quarterly theory, there are two things, right, that must come together in order for you to know or have an high, accuracy in knowing when price should reverse, right? The first thing is time, and the second thing is price. And that's why we have two tabs open right now, right? On the screen, you can see here we have the main tool that we'll be using to get the information that we need in order to know whenever there will be an insertion of liquidity into the marketplace. And then the tab beside that is just trading view, plain old trading view. So yes, the first two things that you need is what? You need these, tools. Forex Factory, right? So you can see the economic calendar, so you can know when to expect price to move before it happens. And, that's the main reason for this is time. So this is basically where you'll get most of your, windows of trading from, or days of trading from. And then you need trading view, so you can see price, right? So both of these are, basically all you need right now, right? And yes, it's a small list because we're trying to keep things simple. Yes, there's more things that are out there that eventually you will learn, but you got to understand that this is the first time that we are meeting, right? So here you guys can see, right, we have the ES, right? And here, this specific contract is the ESH2025, which is the March contract, right? So you're going to need to get the data, right? And I think it's a small fee that you will have to pay in order to see this data, which is the raw futures data, right? We'll be focusing on futures and forex. So For futures, we will be focusing mainly on the S&P 500 or ES, the NASDAQ, and the Dow, right? So those will be our three main instruments that we'll practice or use to practice to read price action, right? Or trade whenever the time is right for you, right? For Forex, we'll be focusing on the dollar index, and yes, you should be taking notes, but don't worry if you're not right now. It will be recorded so you can watch it as much times as you wish, right? So you need the dollar index, and the other two assets that you need is the euro, EU, and the Great British Pound, right? If you guys realize, we have two classes of assets right there. Each of them have three assets each inside, right? These are called the triads, right? The main triads that we'll be using, right? So we'll go deeper into triads and how we use them, right? How we compare them to one another to spot reversals. But for now, that's all you need to know, right? The ES, the NASDAQ, and the Dow, those are the, index futures triads. And the US dollar, the euro, and the Great British Pound, those are, yes, the Forex market triads, right? So those are the main triads, right? And the markets, well, most of the market revolve around these assets, right? You can use these assets to spot many things, even things that are outside of price, right? If you look into the bottom right corner of the screen, you'll see UTC +1, right? So I'm pretty sure that everyone, almost everyone, has been taught to use the New York time, whenever looking at charts. But here we use, the time that the markets actually roll around, right? Which will help you to understand many things and strip away so much confusion, right? We're using the time that Switzerland uses, right? So here you can see that right now it is 23:10 and counting, right? Whenever it gets to 24, that's when the actual another trading day will begin, right? Now, the time right now would be 5:11. Well, the time right now is 5:11 New York time, right? Which is 5 p.m. But here, whenever the day resets, right? Whenever we go into the Asian session, it will be a brand new day when using the time that the Swiss uses, right? That's due to the fact that the first 6 hours of the day, right, is obvious. So we know this is the Asian session. The second 6, the London session. Then we have the New York session. And then afterwards, we have the afternoon session, which is the last session of the day. So right now, me and the team, we're, due to the fact that we know that, right, you have people just waiting for the major information to just take it and share it everywhere, right? We are working on a way for us to, combat that, combat that. Also, right, I've said this before, but you guys don't have to worry about being charged, right, before a month from now, right? Everyone will be updated, right, before the next billing date, right? So you won't be charged on the 20th or of this month. You'll be charged next month, February the 3rd, due to the fact that we began February the 3rd. Another thing is, we will be having live streams twice a week. So the dates for live streams, or the days of the live streams, will be Monday, 7 p.m. Eastern Standard Time. Right? I am trying to, find a time that works for everyone. And then the next live stream will be Thursdays, 7 p.m. Eastern Standard Time as well, right? In between those days, we will be posting charts whenever we have high probability price action. Even when we have low probability price action, we'll be posting charts, but it won't be as clear, obviously, as the days that we most likely will be focused on, right? So with that being said, I hope that you guys paid attention to everything, because everything that we stated just now is important. The time, right, that you should be using, the assets that you need to be focused on, the economic calendar, and so on. The live streams will be, ranged, from around 15 minutes, like that's the goal, 15 minutes to 25 minutes, right? Due to the fact that I know that some people have, a problem with long videos, right? So we will have multiple videos throughout the entire year. There are times when we'll be doing live streams, whereas we'll be reading price action together. We'll be doing such things, right, as we progress. So yes, this video is just to get you guys ready and get you guys in the frame of mind to work, right? Another thing is, you cannot just be using your phone, right? You cannot just be expecting that you can just have your phone in your hand, you can watch the videos once, and then it will, go into your mind and you understand that's not how it works, right? You need to backtest, and when backtesting, you definitely need more than one screens. And due to the way how we read price action and we interpret price action, you definitely need more than one screens, right? You need one screen for your execution and one screen for watching the triads and see how they compare to one another, right? Because the main thing that we'll be focused on this entire year is cracking correlations. There are many of them, right? Many people have heard about SMT, and that's pretty much all that they know. But everywhere that you see a reversal, there's a crack in price. So I hope that you found this useful. And if you guys need to get to me, you guys can either message me on Telegram, but it's easier for you to get me through WAP. So you guys can actually direct message me through WAP. And it may take me some time due to the fact that I have two groups. I have the groups with the OG, which is way bigger than this one, which is why I had to make this one smaller, right? And I hope that you guys are here to actually learn. Right now, I would still be offering refunds to anyone that believe that, they can go out and find something else that's better, right? I have just picked a few of you guys for, basically it's an experiment to see who can, become the next me. Because after this year, right, there will be no mentorship, right, for a while. So one of you guys, and I already have people stepping up from the other group, will need to step up and, pull the weight. That being said, I hope you guys have a wonderful day. The next time that we meet will be next week, Monday at 7 p.m. Eastern Standard Time. Ciao. Okay, guys, so today we'll be talking about liquidity and imbalances. So, as you guys should know, I think I stated in the last video that liquidity rests above old highs and below old lows. So right now in this market, you can see price dropped heavily. When was this again? It was this morning. Yeah, this morning at 6 a.m. Price began to drop, then 7 dropped below these lows. So as you can see, the liquidity here was purged, right? So price ran above here, took the buy side liquidity, which rested above this old high and this old high, which that makes them, you know, waiting for someone to type it in the chat, but no one is, relatively equal highs, right? So price went above that. I remember when price was trading around here on Twitter, I stated that if you're holding cryptocurrency, you should take profits, right? I think you guys, most of you guys should have seen that. Most of you guys did. I was anticipating price to drop, which is why I said take profits, right? Because price ran above these highs, right? There's a lot of liquidity here. There was this high, and this high. And when you have highs like this right now, this is important. When you have three relatively equal highs, but going to the left, you have this one lower than this one, and then this one lower than this one. So you would have something like this, right? And I know that people are going to take this and create their own courses and whatnot, but I don't care. This is nothing, right? So when you have like highs that looks like this, one, two, three, and then you have price go above as 1, 2, 3 did right here. This is better than price just going above like one. This right here is better than if price just went above this one alone, right? Like this is confluence. Like they were really pushing price above to get the liquidity above all three highs. And first of all, this was deliberately left before the fact, right? So even when price was here, to me, it was obvious that price wanted to go below these lows, but due to the fact that it was trapped within this range, I wanted to see price go above here first, right? So we had price run above here, get the buy side liquidity. Remember what I just taught you, right? Like we'll talk about this later. You know, this is like, you know, introduction, no really advanced, really advanced stuff. Like as we go along, we'll dig deeper into everything, but I gotta give you guys the, you know, the technical pieces, you know, the visual pieces, things that you can just see easily that will enhance your trading or your ability to, you know, know where price will go. So yes, back to here. Price went above here, dropped, went back up, and then as I was anticipated, it dug below this low. And again, you can see that we have the same pattern right here, but into opposite. So we have this lower, this low higher than this one, and then this low higher than this one, right? I think ICT calls this trendline liquidity. Yes, that's what it is. So in my experience, I rather to see this trendline liquidity than equal lows. I think that this attracts price more, and it's low resistance liquidity, right? So price will not have a hard time to break through it, push through it, or anything like that. All right, so this is it. So for those that are new, buy side liquidity is any high that is above current price. So right here, this is buy side liquidity. This high right here, this is buy side liquidity, and vice versa for sell side liquidity, right? Sell side is any low that is below current price. That's what sell side is, any low at all. So if we do this, and we come here, this is sell side. This is a whole lot of sell side down here, right? This is sell side liquidity. This high right here is buy side liquidity. This low, sell side. So any high above current price is buy side. And someone's asking if it's going to be recorded. Yes, it is being recorded. Don't worry. Where was I? So any high above current price is buy side liquidity, and any low below current price is sell side liquidity, right? If you're new, please understand this. This is very important. It's not like you can't trade with this alone, obviously. This will not help you alone by just knowing that highs and lows, just that won't help you alone, but you must know this. This is the basic thing that you have to know, right? We're going to build on this as we go along. Okay, so I think you guys should have a good idea about buy side liquidity and sell side liquidity now. Now we'll look at the different types of imbalances. So all of the imbalances are someone says that this is slightly out of focus. Is it okay? Do I need to do something? Hope that it's not. Okay. Okay, good. Okay, so don't worry. After this year, I'm sure that some of you are going to get something that you can actually go into your charts, look for, work with, and yeah. So this right here is a fair value gap. This is the basics, guys. Don't worry. I know some of you are really advanced. I know that. Charter students, I know you're really advanced. Don't worry. We'll get to that stuff that will make your head hurt. Just don't worry. We gotta start slow. This is like the first real video that we're making. Don't worry. And there'll be more. Okay, so this is a fair value gap, right? I'm pretty sure you can see the gap right here. You have the low of this candle right here. I'm trying to make it easy to explain. So you have the low of this candle. It's a 3 candlestick pattern, right? So the candlestick to the right and the left of the candlestick in the middle, the high of this wick to the right should not be overlapping with the low of the wick to the left right here, right? So you can see that this forms a gap. Very easy to see, right? This forms a gap right here. So this is a basic fair value gap. This alone will not help you. It will not, right? But you have to know how these patterns look, because after, we go through this and you know what to look for. You go in your charts, you label them, you can send me your charts and I'll tell you if you label them correctly. MSH, yeah. Don't worry, guys. Some people here, they need this, and it hasn't started yet. Don't worry. Nothing advanced as yet. Right, so this right here, that's a fair value gap, right? And then you have something that's even better than the fair value gap, but it is an imbalance, right? We have the balanced price range. So in my experience, the balanced price range works way better than a regular fair value gap. Like, I would say, like, if I could just trade with one inefficiency, it would just be this. So a balanced price range is where you have 2 fair value gaps overlap one another, right? You have like this one right here. See the low of the candle to the left, the wick is not overlapping with the one right here. So the candlestick in the middle has no wicks overlapping, right? So this fair value gap, you draw it out in time. There's another fair value gap right here. High of this candle, low of this candle, not overlapping. You see the imbalance right here. The only thing right here is, only thing that happened in this candle was buying, right? So I think this works as how, we would expect a order block to work, which doesn't really work most of the time. So, I'm going to be honest with you. Most of you've been trying, and yeah, that's why you're here. So yeah, so this is a balanced price range, right? When the fair value gaps overlap with each other. This is the best imbalance to use, right? You could literally just forget about the regular fair value gap. You could literally forget about the one that I'm going to talk about next, and you could just use this. Okay, and next we're going to go for a inverse fair value gap. Let's see. So this, what are you guys saying? Don't worry, guys, the video just started, man. Have a little bit of patience. Come on. You can't rush it. Okay, so this right here would be an example of what an inverse fair value gap is. Hold on. I lost that one, so I'll just use this one. This is an example of what an inverse fair value gap would be. Right? So these fair value gaps, you can literally draw them through candles, you can draw them through wicks, whatever it may be, right? So you have, the regular fair value gap, all the way over here. The regular fair value gap that you guys know about. Drawn out in time. Boom. Right? Yeah, it looks like hindsight now. We will get to the real time stuff soon. I just want you guys to see what you should be looking for, right? So this one is not as important as the balanced price ranges. And it's not as important as the regular fair value gap is. But yeah. So here it is. Inverse fair value gap drawn out. Price digs into it and then drop. Okay, so now we're going to talk about time. And we'll go over this again the next time we talk in more detail. But now I just got to get your brains thinking, if you understand what I'm trying to say, right? I don't want to overwhelm you and then have you guys arguing that it's too hard or that you're not learning, right? Someone said it looks exactly as what I said at balanced price ranges. No, it's not. Let me try to explain again. Okay, I'm happy that you guys are here so we can talk about this. This right here this is a balanced price range, right? It's probably easier to understand right here. You have two imbalances. You have two imbalances, and they both the fair value gaps. The fair value gap to the left goes through the other. So this is what a balanced price range is. You have two fair value gaps overlapping, right? This now is basically a double FVG. This right here is a regular fair value gap. See, just one. This one is two. This is one. So this is a balanced price range. Hold on, let me fix this. Okay. And inverse fair value gap would be something like this. no gap here, but a gap right here. There's a fair value gap behind this one, as you can see. So a balanced price range is two FVGs overlapping with each other. That's the balanced price range. Okay, and this, what I'm talking about now, will be the important one. So I'm going to talk about time now. All right, when looking for setups, or when you're back testing or tape reading, you will always prioritize imbalances over highs and lows. I'll say that one more time. When you need to find a setup, the base of your setup will be an imbalance. What do I mean by that? I'll show you right now. Here you can see that I am on the monthly time frame, and you can set up the times, the time intervals, as I have it here. If you want, you don't have to like add 30 seconds. That's not important, right? Like 1 minute, 5, 15, 1 hour, 4 hour, daily, weekly, monthly. You can just use this. You can ignore these two if you wish, right? So you need these. These will be the go-to time frames for you: the monthly, the weekly, the daily, the 4 hour, the 1 hour, the 15 minute, the 5 minute, and the 1 minute. And you want to have them in this order so it's very easy to see, right? So when you're going to a setup, you need, as the base of the setup, you need an imbalance, right? So the imbalance right here would be a fair value gap. Make it right so it's easier to see. This is a fair value gap, right? This will be the base of your setup. So before this candle trades here, when it's open and it's just gyrating between the high and the low of this one, you'll be anticipating price to trade back into this fair value gap if you are bullish, right? So this is the base of your setup. Why is the time interval important? Because if you set up your time intervals like this, you can just look for a fair value gap on your monthly time frame, then you skip the one to the left, and you go to your daily, and that's where you would look for an old low, which is above or within the monthly fair value gap, but above the center or consequent encroachment, right? So this would be your higher time frame base for the setup, a fair value gap, an inefficiency, an imbalance, right? This is how the algorithm sees price. This is how it reacts. This is how it key off levels, right? So you go back, skip the weekly time frame, and you go to the daily. So as we can see right here, price dropped below this low, which is a old daily low, which is above directly above a monthly fair value gap. This is the same level, the same monthly level that we just marked out. Okay, the same monthly level. We just skipped the weekly to the daily, and if this was a daily time frame, you would just skip the 4 hour and look for a higher low on the 1 hour time frame. Hopefully I'm making this easy to understand. Is anyone having problems? Do you have any questions? Do you need me to? Are you guys following? Hopefully you are. So and we're gonna have another video for time frame alignment. Don't worry about that. For time sequence, don't worry about that. But this is a way that will make it easy for you, as you can see. So if say you want to trade with the 50-minute time frame, you want to trade on this time frame, then you're gonna just go forward, skip time frame ahead of that, the 1 hour time frame, and then you have to find a 4 hour imbalance, right? Of course, we need a video about time frame alignment to understand more. Of course, yeah, you guys will understand more. I can't say everything in the first video, right? It'll be too long. So this right here alone is very powerful. Like this is what turtle soup is, right? This is turtle soup. Price trades below an old low into a higher time frame imbalance. Then look how explosive it was after, right? Even I remember down here we were on Twitter, we wanted to see higher prices, and then went there. So yeah, if you follow this simple procedure, you will more times than not be on the right side of the market, right? So what we had right here is price traded into internal liquidity, and then rushed for these highs, which is buy side liquidity, external liquidity. So price will not, you won't see price reacting like this after breaking old lows or old highs unless there is a higher time frame level to key off of. Most times, if you see this right here, like price run above this one, no imbalance right here, then drop, that's usually a fake move. And these highs will be revisited as they were here, right? So like here, for example, there was no imbalance right here that caused price to drop. This was just a false move, right? So price drop, everyone's short and think it's going to go lower. Then it just explodes, right? And then you have trendline liquidity right here, this low lower than this one, and this low lower than this one. Perfect. No imbalance that caused price to drop. Very suspect. You don't trust that. Right. So anytime you see anytime you're looking at price action, you see stuff like this happen, price run above a high and drops, you can expect, don't treat price breaking this low as a shift in market structure or anything like that. Just you need to treat this low as a buying opportunity when price drops below it, right? Whereas there's a higher time frame imbalance right here. So for those who did not get when I referred to these up here, if you're trading with the 1 minute time frame, you're going to need a 15-minute imbalance. So if you're a scalper, you like the 1 minute time frame, you're going to need a 15-minute imbalance, right? And you would be looking for 1 minute old lows, right? Old lows or highs above the 15-minute imbalance, right? And the same goes for if you're trading with a 5 minute. If you're trading with a 5 minute time frame, you need a 1 hour imbalance. If you're trading with the daily, say you're trading with a daily time frame, you need a monthly imbalance. All right. -minute. I've talked about this stuff before, but I know that it goes over some of you guys' head. So, gotta do it again. Gotta try my best to make you understand. There's certain things that you will learn probably end of this month, next month, and you know they all have prerequisites, right? You need to understand the basics before you understand those, and you can't rush it. You can't just learn everything in one video or 2 videos, right? You gotta give yourself time. You gotta make the knowledge soak. You gotta go in your charts and look for these things happening, repeating, right? And you'll see that this is the truth. So yes, so you got, if you're trading with a 1 minute time frame, price goes below a 1 minute low and then it trades into a 15-minute imbalance at the same time. You see, that sounds a little bit confusing, doesn't it? So if I didn't show you guys all of the, what I just showed you, the basics and what an imbalance, what you're looking for, an imbalance of your value gap, old lows, old highs, buy-side liquidity, sell-side liquidity, then this would seem like gibberish. Okay. Of course, after it will be recorded, you can fast forward, you can skip, whatever you'd like. So yes, this is the sequence that that the algorithm refers to, right? 1 minute loads, 15-minute imbalances. No, 1 minute high or low, 15-minute imbalance. 5 minute high or low, 1 hour imbalance. 15-minute high or low, 4 hour imbalance. 1 hour high or low, daily imbalance. Then we go on 4 hour high or low, weekly imbalance, daily time frame high or low, monthly imbalance. Hopefully you guys got this. This will be very important to your development. Yes, someone asks, yes, the 15-second time frame. Yeah, for a 15-second time frame, you need a 1 minute imbalance, but you don't need to, focus on that right now. Well, if you're already advanced, then yeah, you can. But if you're new, it's better to use like the 15-minute and the 5-minute time frame to trade. Even the 1 minute is not bad, but yeah. Okay, let's talk a little bit more about time. So I'll give you guys the best time to trade. Right, the best time to trade is 9 to 10 a.m. in the morning. New York session. 9 to 10 a.m. in the morning, New York session. That's the best window of time. Like 70% of the time, you'll find something there to do. Someone asked me to explain Taylor Soup again. Don't worry, after the video is over, you can rewatch it as many times as you want. It's being recorded and it will be saved. Where was I? Okay, so 9 to 10:30 is the best time to trade. Nine to 10:30 in the morning. I'll say it again, 9 to 10:30 in the morning. You can just trade 9 to 10:30 in the morning and you'll be good for the rest of your life with just that period of time. You don't need more time than that, right? So if you're trying to backtest, you're trying to study price, that will be the best time to tape read. And I'll be tape reading some of the times with you guys live, telling where it should go or where it shouldn't go and stuff like that. Yes, I'll be going over breakaway gaps at some point, but it's not necessary right now. There's a lot of stuff that we're going to go through, right? Yeah, and eventually we'll be trading live when you guys have acquired, don't worry. All of that will be done. Right now is not the time to be trading, right? And I'll go over the markets with you guys right now so you can see what I'm talking about. Let's look at NQ. So before we had this fall, on Twitter talked about prior to this that this was probable. Okay, so where price is right now, it's nowhere that I would say is actionable, right? So I would need to wait for more information before I did anything at all right here. There's nothing to do right here. Nothing at all, right? Next month, February, we should see price begin to, align to the downside as the seasonal tendency kicks in and another quarterly shift takes place, right? The last quarterly shift happened down here, right? Around, I would say, 2 months ago or so, or a little bit over that, right? Every 3 to 4 months, the market changes direction, as I've said before, and we'll go over that in detail as well. So right here, nothing much, right? I am not bullish. Like currently, I am not bullish on the stock market. I am not bullish on cryptocurrency at all. I'm not bullish on Euro USD, GBP USD. Nothing of that nature. But there is nothing that like I can work with, I can use to like frame a setup right now. Maybe like if I'm on the micro time frames. Then I could find something like the 15-second, 1 minute time frame. But no, if I go to trade with the 1 hour time frame, then there really is not anything to trade right now. You can see all of this back and forth, back and forth, back and forth. Nothing here that makes sense, really, right? You don't. So I will do this so you guys can see. Okay. So we need 60 bars, which will be 3 months. Right. So here is where we would start looking for price to change direction and head towards, the inefficiencies here, this low, this potentially. But yeah. So time is the most important part of this, right? You always hear me say that the candlesticks are not important because the time dictates what the candlesticks do. So as you can see, like if you look back this point, this was the major low that catapulted price up. This was the last quarterly shift. And the next one, which will be around here, probably around February, give or take a few days. When price gets to this point, we should be seeing immense selling pressure. So we'll be shorting every breaker, we'll be shorting every fair value gap, we'll be shorting above every old high, stuff like that. During the month of January, the market usually either just consolidates or just try to get out to, the weak traders, everyone that came in the new year saying that they're going to be a trader now, they're going to learn how to trade, and they just rush into the market with no experience, right? So that's the purpose of January, which is why my mentor ICT says that he doesn't trade January. That is exactly why, right? It's the second least probable month of the year to trade, right? It's very difficult. You can trade on the lower time frames, of course, but like finding a bias on like the daily time frame will be very hard. As you can see right here, we don't really have any framework to work with. So that's it for futures. Go to DXY. Okay, so during the next quarterly shift or the rest of the year, I think that we'll see these highs get taken. I have to wait until like I get more information first, but yeah. So like we have this high right here, the current range, and we have this low. We have a fair value gap here. I'd like to see price stay below this and gyrate a bit here or sweep this low before going towards here, as it's not yet time for it to do so. Or even if it goes above that, it gyrates below this low. This is the weekly time frame, right? So this is a fair value gap. We have liquidity here, and we have liquidity here. If we see price trade above this high, this low, that would set up moves within the forex market, the crypto market, and the forex and the futures market. So as you can see, weekly fair value gap. We go down to the 4-hour fair value gap, and you can see price rejecting from this imbalance right here in real time after doing what I just told you guys about going above this old high. Can you guys hear? Is the audio okay? Okay, good. So when the next quarter the shift kicks into place, then we'll be shorting EU, GU, and looking for the XY to make higher highs. On the daily time frame, we are stuck between this daily volume imbalance and this fair value gap. There is no clear read on price right now. No clear read at all. Like, I am not in the markets right now trading or looking for moves or anything. The last thing that the video is lagging. Okay, so the last thing I really looked at is Bitcoin, because like that drop was obvious. But right now, the markets are not primed to be high probability. This will change within like the last week of January, the beginning of February. This is like what usually happens every year. Don't be in a rush. If you're in a rush, you're going to be knocking your head on a brick wall, right? Gotta stay calm and be calculated with your decisions. Oh, yeah, I was already working on this one. There we go, EU. So I'd say the yearly drawn liquidity would be, it's going to be probably down here. This one for sure. We'll probably need to run some buy side. Leave an SMT between either this and GU or this and DXY, and then we'll continue lower. Price will be way easier to read after next month. Wow, we've been talking for 57 minutes already. Amazing. SMT it's not more important if it happens between DXY or GU in terms of trading in regards to Euro USD. I think, yes, sir. I will touch more on quarterly theory, of course. Quarterly theory. What a wonderful name. Today was just about getting you guys to understand inefficiencies and liquidity. That's it. And giving you guys the right time frames to frame setups. How many videos there will be per week? There will be 2 to 3. I think I'm going to be closing this one off soon. I can't believe that I've been talking for almost an hour. Hopefully you guys learned something. Please, if you have questions about anything, if you need if you need me to explain anything in more detail, then you guys have my contact me. I respond to you guys. I don't respond to anyone else. It's recorded, don't worry, Sam. And I went over a lot of things in this live stream a lot of things. So please pay attention. Today is Wednesday. There will be 2 to 3 live streams per week, sometimes 4. Don't worry, this is the first live stream. Well, yeah, the first live stream of the year. Sometimes I'll probably be here on weekends too, don't worry. And yeah, I'll probably, if I'm not here Friday, I will be here Saturday. So yeah, if you have any questions, if you got any feedback that could make the streams better, then please let me know. Also, I'll be dropping a few videos when I think it's time, when you guys have gained enough, understanding of price action. Please, send your charts in the group so I can see how you guys are growing. And yeah, I hope you guys have a good day. I think I overstayed my time. It's been talking for an hour now. And have a good day. And I'll see you guys soon. Hello everyone, I hope that you guys had a wonderful trading week thus far. Today kickstarts the, beginning of your future, right? We will be discussing the essentials to understanding price action, right? You need to understand that this is a basic lecture, right? It will not be drawn out, to save you sanity. But we'll be touching on everything that you need to understand. And after this lecture, I'm pretty sure that most of you will be better than 90% of the herd. So here, I'm pretty sure that you guys have been introduced to the economic calendar. I'm not sure if you have learned that the high and low of the week usually forms on days that have high impact news events, right? So just based off of the information that's here, looking at the chart right now, right? And you'll hear me repeating this week after week, because it is something that's important for you to understand, right? Just based off of, looking at the chart, seeing the red folders, you can, have an idea of when to expect a major reversal, right? When using the economic calendar, be sure to, be focused on the USD high impact news events than anything else, right? This is all that you need right now is the USD high impact news events, right? It's pretty easy to, get this on your display. You just go here, you click here, you click USD, apply a filter, and then everything will pop up on your screen. Right here, right, this is something that we call around here, it's a triad. Right, so now looking at the screen, we have the forex market triad. This is something that will be very important to you going forward and throughout the entirety of your career, whether it is that you want to be an analyst or whether it is that you want to be a trader, or you could do both. if that's something that you wish. There is something here that some of you may be able to see that occurred before a reversal. What is it? Right? What is it? It's a cracking correlation. Right? Cracking correlations, well, the major cracking correlations occur whenever price trades above a high or whenever price trades below a low. Right? Around these parts we call it SMT. We have different types of SMT, which we'll be touching on in future lectures. But for now, this is the main thing that you will be focused on, right? You won't be focused on gaps that much right now, right? You won't be focused on order blocks or anything else. It's literally just this, right? Here you have price failed to break below this low right here. And let me go and show you guys the corresponding candles for each asset. So this candle right here, which was formed on Monday, right, 3rd of July 2023, you can see that within the price action that occurred within the US dollar, price failed to break below this low, right? Within the price action of the euro, price failed to break below this high. But within the price action of the Great British Pound, we had price trade above this high, and this is where we had a cracking correlation occur. The higher the time frame, right? The higher the time frame that you have the cracking correlation, the higher the magnitude of the move, right? So we have spoken about this, right? In the 2024 mentorship, all of this move that you see occurring right here. And it was simply based off of the fact that we had a cracking correlation, right? Price traded above this high in the British Pound. Price failed to trade above this high within the euro, right? To make it easier to be seen, right here, you can see price failed to trade below this low. Someone said that cannot see the mouse. How? Really? You can't see the mouse? Oh. That's something that I did not expect. Okay. Don't worry, we'll get down to it. So we need to share the screen and not the window. You guys can see the drawing though, right? Okay, for now we'll just use the crosshair. I think it's better to use anyways, right? And here for the euro, you can see that the same thing occurred, which happened within the dollar, right? It's very important to understand that the euro is basically a reflection, or a mirrored image of the US dollar. Here within the Great British Pound, you can see that price clearly traded above this high, right? So the most important things, right? Well, one of the most important things which should be a part of your setup will be, revolving around this cracking correlation right here. right? And here now, right, you guys can see that, right, this is current price action, where we have the euro, not the euro, the S&P 500 going higher, and we can expect it to go higher, right? And whenever I say things like that, you know, don't just take it as a grain of salt, right? Because I am not going to say something that I, you know, don't expect to happen, right? If I say expect this to go higher, then it's pretty clear. Okay, we're bullish now, right? Well, I am bullish. Pretty clear, right? And here you can see the Nasdaq. You know, we can expect that to go higher as well, and the Dow. Now, what is the, you know, underlying concept which pushes us to, you know, understand that we can that price might go higher or price might reverse, right? What is it? You can see it right here. It's pretty clear, right? S&P 500. And remember, when you're using, you know, this concept, you need to have the triads in front of you, the triads for the futures market, or as follows: the S&P 500, the Nasdaq, and the Dow, right? As long as one of them falls out of sync, then you can expect a reversal, right? As long as one of them falls out of sync, you can expect a reversal. So here for the S&P 500, price failed to trade below this low. Then what happened afterwards? It continued higher, and we can expect it to, you know, get to these highs, right? As long as we see a lower time frame cracking correlation occur here. Do you understand what I just said? Right? If not, you know, just rewatch the video, and we will, you know, expound upon this topic furthermore. Here, the same thing occurred as which occurred here within the S&P 500. Price failed to break below this low. But within the Dow, what happened? We had price, you know, clearly break below the corresponding low right here. And this is what created a cracking correlation. This is what activated the actual liquidity in the marketplace, right? So people usually say liquidity rests below highs and lows. Liquidity just, you know, is everywhere. In my opinion, that's not the case, right? We do not, you know, treat a low as liquidity unless it is ready to have price, you know, reversed. So just here, liquidity is created whenever, you know, things like this happen. Whenever there's a cracking correlation, that's when we really have a liquidity below a low and liquidity above a high. Now we'll go a bit deeper into, you know, price action, right? So you guys can see the, which is marked as catalyst, right? That is the low that was left, right, by the SMT, which we were, you know, referring to in the previous slide, right? So price traded below this low, but failed to trade below this higher time frame low, which created what? A crack in correlation, right? Between this low right here and this low, you know, it's a cause for concern. So as long as price trades below this low right here, but fails to break below this one, then what can you expect? Higher prices. Another thing to pay attention to is after you have something like this happen, right? You have higher time frame SMT right here. The only thing that you need to wait for is what? a lower time frame SNT, or another current correlation, which we will talk about very soon. And another thing of concern are these highs right here, right? So whenever you see highs like this that are not, smooth highs, right? These are not relatively equal highs. These are not equal highs. They're diagonal highs, right? This is trend line liquidity right here. So as long as we get a high impact news event, which forces price to crack, so we'll get a cracking correlation between the assets of the triad, then yes, we can expect, higher prices. So yes, that's the main thing for you to understand. That's the main thing for you to study. If you're brand new, what should you be studying, right? You should just be looking at the triads right now. So the S&P 500, the NASDAQ, the Dow, looking at the euro and comparing it with the British pound and the US dollar. Look at, whenever you see price reverse. And most times, right, you'll see a cracking correlation. It's always there. Every year, every month, every week, every day, every hour, every minute, every second, there's a cracking correlation, right? Every time that, you see price printing and you see it reverse, there was SMT, right? Another thing to note is that 70% of the times when you have and these are things that you should be writing down right now, right? 70% of the times when you see the high and the low the high or the low of the week form, right? There is always a cracking correlation. There's always SMT. The same thing occurs for the sessions of the day and the 90-minute cycles and so on, right? So, you need to go into your charts. What should you be doing? Locating the reversals of price action whenever price traded below a low. Look at, what's their SMT? This will train your reticular activating system, right? That's what it will do. There will become a time when you won't have to mark your charts anymore. There will become a time when you won't even need more than 2 assets to compare, with another 2. And you just see the reversals as they come. And here you can see we have the S&P 500, right? So we had price trade below this low. The catalyst, occurred when price failed to break below this low. Whenever we had this swing low form, price failed to break below this low. While, within the Dow, we had price breaking below its particular low, which matches the timestamp of this low right here. After this occurred, price traded back above this low here and continued to trade higher. Pay attention to the time that a low of the week was formed, right? Pay attention to the time when we have this price action, trade within this gap, and pay attention to the time that we had the expansion, right? Whenever you have a Monday, right? You have a Monday and it expands. What should you expect? What happens after a Monday expands, right? You can expect price to pull back within the range of that Monday's price action. But when should it pull back within that Monday's price action? That should occur on a day that has a high impact news event. At the highs around 6,200, near 6,200, 6,180 for this the S&P 500, we can see that we have relatively equal highs. We can expect price to be drawn to those highs, right? As long as we do not have a bearish crack in correlation. So now you guys need to go into your charts and dig. This is how you'll learn, right? This is how you will get acquainted to reading price action, and this is how you will get better. I can assure you, right? I can assure you that if you don't do this, you will not learn anything. I'm 100% sure, right? If you don't follow everything that I'm telling you, you will not learn. You cannot just watch the video once either, right? You must watch it more than once, right? You must make notes, right? There are things that are said just for you to understand, right? Even though, right, you've just gotten a few videos so far, each video is a prerequisite, right? So if you skip one, you'll be in trouble. You seriously need to, pay attention. You cannot just come here and think that, oh, it's going to be so easy. I'm just going to watch a video once. I'm not going to get it. No, that's not how it's going to go. So yes, you guys will realize something, during the course of this month, right? Price action will not be the best. And, that's a given for every year. The worst months of the year to trade are when? January and December, right? That's when you will have the worst price action. As we go into February, and I'm not saying that the price is untradeable. Of course it is. If you like to, you can, right? But as you go into February, March, April, then, price action will become so much clearer and so much easier for you to read. So yes, I hope that you guys found this useful, right? We will be back here next week at the same time, and you have upcoming lectures, I believe, from the members of staff that are here, right? We have Lawson, we have Medic, and we also have Jacob, right? They're very proficient in regards to quarterly theory, very knowledgeable, right? Some of my top students. So if you have any questions, they'll be here to answer your questions. And remember, it is not a sprint, right? It's a marathon, right? You need to survive within this industry. And you can't be chasing after this thing too fast, right? You got to take your time to learn this, because it's not something that's easy to learn, and it's very hard for me to teach it, right? With that being said, good luck and good trading. So yes, good afternoon, good evening, good night, good morning, wherever you are. It's nice to see all of you guys here. Again, I haven't been here since last week, Wednesday, I believe. And I do not like that sound that I keep hearing when you guys, type. Not that I don't like you, but yeah, that sound gets to me. Anyways, it's nice to see you guys here. And I am hoping that this stream will open your eyes, right? So basically, after we go through the information that will be delivered right now, I'm just saying this, you won't need to be here anymore. Right? Because it is that good. Right? It's really just that good. Right? Don't take it lightly, right? I think some of the guys from the 2024 group are here, right? Some of them are here. They're pretty, knowledgeable about this topic as well, right? And before going into it, this is just one of the ways that you can use this, right? And there's nothing that I will do that is random, right? If I tell you guys something that okay, expect price to do this here. And if it happens, the reason why I gave you that move to look out for is due to the fact that, it is aligning with, a future teaching or with, a past teaching. So yes, you guys can see that, this week was not the best week to trade. The best weeks to trade, and this is very important what I'm telling you right now, are basically, weeks that have, CPI, FOMC, and what else? NFP, right? Those weeks will give you the most volatility, right? Those weeks will be, easier to navigate. Let's just say that. Weeks that do not have bank holidays, right? So you guys can see Monday we had a bank holiday, but then we had Trump speaking. We would not do anything on this day, right? Then Tuesday we had no news. Wednesday we had no news. And then here we had, the president of the United States speaking again, right? I would consider these days, but, if you were trading, a higher time frame premise or, a higher time frame move, which is based off of at least the 4-hour time frame, then none of this would matter. The only thing that you would look for is what? Sequential SMT, what I am going to show you right now. Maybe many of you have heard it before. You've seen it been leaked before, right? But this is something that, it's based off of quarterly theory, right? And no one else talks about this shit, right? No one else before me spoke about this shit, right? If you know SMT, you're 10% there already. Right? And it's not just that, it's just, a strategy and it's, a nice play on words, sequential SMT. It's something that works, right? Anyways, the time that we looked at the futures triad, and you guys already know what the futures triad is, right? It's comprised of these 3 main asset classes, right? The S&P 500, the Nasdaq, and the Dow, right? Here you can see that, okay, we have SMT at these lows, but what makes this SMT special? What makes it special? Okay, there's a lot of things right here that we could talk about, but no, we're just going to talk about one. Right? And remember that while price was trading here, right, on this candle right here, what did we expect? Higher prices. And I was not being vague or anything like that. What did we say? We should expect higher prices. There's SMT. I just did not tell you that there is sequential SMT, because, then where would the lesson be in that, right? So below these lows, right, or a separation of different times, which are what? In the form of quarters, right? Someone's saying that they can't hear anything. Please let the person know that they'll be able to hear it after the recording is posted, right? So now, right, I turn the special indicator on, right? You can see that this blue right here, what does it represent? The 4th quarter of the previous year. So this is the 4th quarter of 2024, and this right here is the 1st quarter of this year, right? So as you guys can see, this low right here and this low right here, well, this is the lowest close of the previous quarter, right? It was formed here. This low failed to break below this low during this specific period of time right? And you look at the NASDAQ, the same thing happened. But wow, in the Dow, what happened? The Dow broke below the previous quarter of, which is the fourth quarter of the previous year. So this is Q1, right? Right here is Q1. From this period of time going forward, that's Q1, right? Was formed in Q4. But Q1's within the Dow, Q1's low was lower than the low in Q4, whereas within the NASDAQ, it was higher than the low in Q4 during Q1, and the same thing for the S&P 500. So simply what we're saying here, and there will be another lecture that will expound upon this, which is pre-recorded from last year, that you should study as well as this, right? Here we're talking about live price action, what to expect, right? We already saw the move that we should expect, and it played out very fruitfully, right? It was not as clean as one would want it to be, but it did happen, right? And this is the type of price action that you should expect to happen during January, right? It's January, right? I've said this before, if there's 2 months that I would not want to do anything in, it's December and it's January, right? Okay, now what could we expect? Okay, we're gonna expect those highs to be blown right out, right? First the S&P 500, then the NASDAQ, then we'll see what happens in regards to the Dow. But for sure, and we highlighted these highs before since price was here, and we got price to do exactly what we expected it to do. Another thing you should understand, this is not clean price action, right? We'll see cleaner price action next month, and then as we get close to the third quarter of the year, we'll just be seeing every month get better, right? This thing right here, sequential SMT, what is sequential SMT? Sequential SMT is SMT between quarters. So you can have sequential SMT between Q1 and Q2, between Q2 and Q3, between Q3 and Q4, and what resets the cycle is SMT between Q4 and Q1, right? I'm going to actually upload 2 specific lectures that are pre-recorded that you guys should watch. Another thing that you guys should learn is the revolving true open, right? So the revolving true open exists only when you have sequential SMT. So in the case of here, right, where you have sequential SMT between the fourth quarter and the first quarter, right? Now that's the only thing that we'll refer to, fourth quarter and the first quarter. We don't have to talk about if it's the yearly cycle, the monthly cycle, the weekly cycle, the 90-minute cycle. It just doesn't matter, right? It's fractal, right? This is the way how price operates, right? This is what it does, and that's it, right? There are a few other factors that would make this more high probability that the guys from 2024, they can see exactly what I'm talking about right here, but you can't see it, right? You can't see it yet. Please don't talk about it. We'll talk about this very soon, right? And yeah, so the revolving true open would be the opening of the quarter that kicks off the SMT, right? That's what it is. So this right here would be the revolving true open, the opening of Q of the second quarter right here, which is an involvement with the SMT, the sequence SMT, because there's 2 quarters that have to be involved, right? The last group that we had, they did not get the revolving true open until the second month, right? They did not. But, right, I can tell you we have, more things in store, more things coming, but I don't want you guys to believe that I am trying to get you to stay here, right? I believe that, if you should stay here, it should be just, based off of you liking the way that I teach, you liking the information, and you finding it useful so far. So if I go a month and you don't get something that you don't find useful, then it's over, right? That's just what it is. It's not about like this, like truthfully, it's not about money like that right now at all, right? It's, this year is about, handcrafting some of you guys and having you guys just blow up with the help of the group of 2024, right? That's what it is. And just trying to acknowledge, the hardships that previous group have went through to see, who's the best, who's actually the best. Basically, that's what it is. And here, you guys can see that right here, we have a gap, right? And I will post, a supplementary lecture about gaps as well, and highs and lows. And yes, so how the schedule will be, I believe we will have Jacob going either Sundays or Mondays. Truthfully, I should be going on Wednesdays. Then we have another, maybe Lawson go Friday, and then sometimes you have Medic on Saturday. So you should be getting at least 3 to 4 lectures every week, right? So yes, we're gonna have to fix that. Okay, let me know if you guys can see this. Can you see this dot? Okay, you can. Okay, cool. So this right here, this gap, this is a balanced price range. And if you don't know what that is, don't worry, right? As I said, I'm going to post a pre-recorded lecture that will explain this better, right? Well, there will be 2 pre-recorded lectures, right? So here, price broke below this low, and doing so, there's a higher time frame low to the left, right here, which price failed to break below, while we have the Dow breaking in below its low, which formed at this time, creating sequential SMT. That is the catalyst that led to price running higher. That's why when this candle, when I believe this candle was printing, was it this candle right here? Don't remember, it was around here though. We expected what? Higher prices. People usually, have a problem, with trading gaps like this, right? Well, I would consider this as a liquidity void, not a gap, right? But you usually see price just break here below this low right here in the gap, below the open of the gap, then just rally. Why? That's due to the fact that we have this guy around here, right? This is the balanced price range, right? This is the base of, that caused price to run higher, right? So first we had the higher time frame sequential SMT. Then we had what has happened? Price was trading below the revolving true open, right? Where is the 1st of January? Right here. Open up this candle, draw it out in time, price traded below, there was sequential SMT, price run higher, above this high right here, dropped again into this balanced price range, then it continued higher. So the reason why this continued higher is not because of the gap. The reason why it continued higher is not because of this low here. The reason why it continued higher is not because we had buy side liquidity here and buy side liquidity here and liquidity here for price to reach for either. It's just because we had a crack in correlation in the form of sequential SMT, because there are many cracking correlations that we have to go through. Right? So there's this that you'll see happen a lot, right? It's very common for this to happen, right? You'll see price leave these clean lows right here. Then you'll just be like, why did this happen? Why did this happen? Well, we already talked about why it happened, right? And this is why, going forward, you cannot be focusing on one asset. You need 3 assets, right? 3, especially if you're, focusing on the ES or the NASDAQ. You need 3 asset classes: the S&P 500, the NASDAQ, and the Dow. That's your triad. You need 3 of those to be looking at the same time. And that's where you will gather, most of the information that you need to read the marketplace, right? Up here, you can see that we have these highs that are, relatively equal highs. Once you see price, just within this range right here, which I would consider as the gray area, right? So if price, before this happened right here, before price traded higher right here, before price even broke below these lows right here, this would be considered as the gray area, right? When price is here, you don't know what to expect, right? For you to know what to expect, there's one of 2 things that you need to happen. Either price is going to trade above this high, or trade close to this high and fall after sequential SMT, or that same thing will occur here. Price run below these lows, there's SMT or sequential SMT that's created, or price fails to break below these lows, which is what happened, and then we have price just rushing higher, right? So I hope that this is something that can help you to more understand price. There are 2 more lectures that will be posted, right? One will be helping you to more understand gaps, and the main types of gaps are just the main types of PDRAs that you need to understand. And then there will be another lecture that will be posted on sequential SMT, right? So I believe that, I'm not sure who will be holding a lecture tomorrow or maybe tonight, truthfully speaking, right? I'm actually just just coming back to my senses, but I'm actually just getting back active, right? So the next time we will be talking will be next week. Next week we'll be actually having 2 more lectures, which are pre-recorded. They're structured for you to understand price action as how I understand price action, right? There are some things that I have in store as well, which are generally for the class of 2024, but I believe that I will be sharing half of the privileges with you guys, right? As soon as everything is back to normal, which should be happening very, very soon, right? with this tool that I've just shared with you, Sequential MT, right? Don't just watch the lectures once. Watch them more than once and take notes. The magic happens when you are backtesting, right? So this is the actual mentorship right now. You want to learn how to read price like me, right? This is the mentorship. It's not, the mentorship isn't just, you know, all the technical stuff. No. You need to apply these things to your charts, right? You need to plot them to your charts. You need to take notes. You need to put them on your walls. You need to look at them every morning, every night, right? I have over 10,000 hours of, you know, chart time. You need to be trying to get at least half of that. It takes a lot of work, and it's not going to be easy to understand. But it is possible because I have some of these guys from 2024 that are crazy that you can see, right? They're all over Twitter, and some people consider them, oh, they're leakers or whatever it is. I don't consider them as leakers. I just, you know, whatever they want to do, right? They paid for the information, they learned, they mastered it. And it's very good to see that, you know, just to see people texting me, oh, your information really helped me, you know, all the emails, it's very good, right? So I just want you guys to take the information seriously. Only apply what I talk about, right? If I don't talk about it, it's not important. That's it. If I don't talk about it, it's not important. And you need to go into your charts and prove me wrong that this shit does not work. With that being said, we'll be talking next week again. You already know the time. It will be posted for you guys to see. Ciao. And for the person that say that they're having a problem with WAP, you know, you can send a message to Jacob. You know Jacob, right? And he will relay that message to me, right? Can I share my approach? Definitely. Of course, that's what I'm doing. But, you know, I can't share all of that one time. You know, you won't get it like that. It will be confusing, and this is the reason why we, you know, chose to not take in too much people at the same time, right? Because if we did do that, then I wouldn't have the, you know, opportunity, because last year was very hard for me to answer questions from 1,000 people, right? The chat would be just be blowing up. So we took a different approach this time. Right? How did I manage to even find new and unique insights about time that others haven't? It's just, you know, work. Being locked in a room for, you know, months on end. Right? The only time I go downstairs is when I'm getting something to eat or taking a shower. That's it. That's pretty much all that it is. Right? Does sequential SMT have to form below or above the previous quarter, high or low? Yes. 100%. And I think that those questions are the ones that, you know, need to be attended right now. Anything else will be discussed in the lecture. I'm just seeing that I have not shared the screen as yet, so I will do so right now. Please confirm with me that you guys can see the screen. I'm not gonna lie, I like Discord. It's just that, you know, it's not that, how would I see, safe from leakers. but I like it. Trying to get acquainted with all of you guys. We're a family right now, right? This is a family right now, all of us right here. So you guys can see what's happening. Amazing. You guys, I always hear that you guys can't see the cursor, right? That's the only thing that I don't like about this platform, but can you guys see the cursor, the mouse? You can't see, okay, so maybe we'll have to use something else. So yes, this week you guys can see that we had no news on Monday, and what we're looking at right now, as you probably have heard from everyone here, right? All of the members of staff, Jacob, Lawson, right? This thing right here, forexfactory.com, the e-commerce calendar, is by far one of the most powerful tools. And why is that? That's due to the fact that it gives us the time to expect something to happen. Right? That's it. It gives us the time to expect something to happen. Right? Without this, right, I wouldn't be lost, but it would be more difficult for me to anticipate something. Right? Without this, I would have to wait, for price to confirm. Right? But I have the e-commerce calendar and know what time a specific news event will be released, then I just wait for a cracking correlation to occur within that period of time. Right? It's very important. A cracking correlation can occur, and remember, a cracking correlation can occur within any cycle, right? So if you're using the 50-minute time frame, well, which cycle will you be using? You'll be using the daily cycle, right? You'll be looking for correlations between the. People are saying that they can't hear. Okay, so some people can hear, some people can't hear. Okay, that's good. As long as some people can hear, that's good. It will be recorded. So if you can't hear, just know that it will be recorded, even though you can't hear what I'm saying right now. Anyways, a current correlation can occur, on the 50-minute time frame, which would be directly related to the daily time frame and the daily cycle. Right? So 15-minute time frame, daily cycle. To be honest, you don't really need much more than that. Right? You don't really need much more than that. But one second, what just happened? What just happened? One second. We left off talking about 50-minute time frame daily cycle. Right? Using that alone, right, you will realize that you will find a lot of opportunities, right? What does that even mean? 50-minute time frame daily cycle. Right, that means that using the daily cycle, right? Focus on the daily cycle. You're trading with the 15-minute time frame, right? As someone that is, just learning about these concepts, learning about SMT, learning about sequential SMT, this will, give you a lot of opportunities to explore, right? So backtesting, you go back, you look at, previous data. Look for whenever you had, the high of the day formed and the low of the day formed. And then you realize it's usually SMT. That's usually what happens, right? That's usually what will form the higher of the day, the lower of the day, the higher of the week, the lower of the week, the higher of the month, and the lower of the month. It's very fascinating, right? And also, using these specific times, right? Times you realize that whenever you have news, for example, here we had news during the morning session. Here today we had news during the afternoon session. Tomorrow we have news during the morning session. So when should you be searching for SMT to happen? Tell me. During the morning session. If it happens, you have a trade. If it doesn't happen, then you don't do anything, right? Because right now, this is what you're learning, right? And I'm specifically talking to the people that are new, right? I promise you, this thing works. Sequential SMT. And what else? Plus, alignment or aligning the news. That's the model that you should be practicing right now. Since we have news tomorrow, 8:30 a.m. So when do you really have to sit down in front of your charts? 8 o'clock, right? And then you just sit down for the entirety of the New York session, if you wish. Right? Then Friday, we have news again at 8:30 a.m. That's another opportunity. So yes, as you guys remembered, right? We were looking for higher prices, and we are still looking for higher prices. Right? We were looking for higher prices, still looking for higher prices. Here we had price gap down, and price just dropped below the equilibrium of this range right here. Right? This range right here is from this high, which is a swing point, to this low, right? So right here, this range, where are we? Pretty sure everyone knows what this is. We're in premium in regards to this range. Right here, the same thing goes for price in regards to this range right here. Right? There are times when you will see these type of things happen, which are, what I would call unpredictable. Right? These things are, if there's any randomness, if there's any randomness in the marketplace, right, it's here. If you couldn't see the mouse, don't worry, in the recording it will be there. Right? So here, leading ridge high, leading ridge low, we're in premium right now. And the reason why I said it is that usually this means that you should expect lower prices, expect the short, not us, not here. Why is that? This is due to the fact that we have sequential SMT here below these lows, right? What's happening? You see sequential SMT between the lows of the S&P 500 making a higher low, between the Nasdaq, even due to the fact that we had, that news that came out with, China challenging OpenAI, or, the largest company in the US, Nvidia, right? China is challenging them, so apparently that's the reason, that's why they said that this happened, right? So the Dow took this low, and until we have another sequential SMT, we will just be expecting price to go higher, right? I really don't like the crosshairs that much, to be honest, but until I figure out how to, or we figure out how to make sure that the mouse, the actual cursor is showing, then we just have to use it. Anyways, here for the Dow, something, different happened, right? Here, when we had the release of that news event, the specific news event, that was random and gave us a lot of volatility, right? Price dropped, but it did not drop below the equilibrium of this range right here, right? So here we had this swing point form, price dropped, fell within this fair value gap pertaining to the Dow. Looking at the Nasdaq, we dropped below the equilibrium of the range, and looking at the S&P 500, we did drop below the equilibrium of the range, right? So that in itself right there, that's a cracking correlation as well. And the reason why this is important is due to the fact that we had such a news event, right? Whenever you have, headlines of war just pop up. Okay, here just got nuked. A bomb was dropped here, right? Some type of event, that, a black swan event occurred here, right? So it's basically just black swan events that would allow, this type of volatility to occur, that would trigger people into believe that, oh, price is going to go lower, right? Because everyone on their grandmother thought that we were going to take these lows out. Not us. Why? Because we have this right here, the cracking correlation. It's telling us that we should expect higher prices. It's telling us that this is what price is doing right now. And until we see another one that, cancels this correlation, then our bias will remain the same. For now, and it's pretty easy, pretty straightforward, we look for bullish cracking correlations and expect price to run above these highs, right? So here, looking at the Nasdaq, what's something that pops out to you, right? What's something that just is just undeniable on the charts right now? First of all, remember that, right? Remember that we already have a bullish cracking correlation. So for me, here it is. These highs, they're too clean, right? They're way too clean right now. So we have these highs right here, and then of course we have these highs right here, right? And then of course right here, and this has not been taught to the group of 2025 yet, but this is a new week opening gap, right? The new week opening gap is classified by the close of Friday and the open, right? So the gap that's formed between the close of Friday and the open of Sunday, right? If you're a person that, is difficult for you to understand, then you can use this right now, this indicator right now, that will help you to understand. Yes, it's just an introduction, but you will see that, it works pretty well, right? every time you have a reversal in price action. And basically I'm just trying to make this really easy for you guys, right? If you have a correlation that falls on a new week opening gap, if you have a sequential SMT, whatever it is that falls on a new week opening gap, it will be high probability. Just said that already, right? Look at where price, always choose to reverse. Look at where price stops. Look at where price consolidates. Okay, so that's the name of this specific indicator. And I'll take it off right now. Says the draw on liquidity, right, would be above these highs right here, right? Your goal, right, as someone that's trying to learn from you is what? You're learning how to read price. You're learning how to read price better than me. That's your goal, right? That's your goal. You need to be able to gauge the underpinnings of price action, right? That's what it is. You need two things to do that, right? Right now, the economic calendar, sequential SMT. So that's your main focus, right? You've never studied any of this shit before. I'm not telling you about any gaps or anything. I'm not trying to give you any fancy words. I'm not trying to teach you anything fancy. I'm teaching you something that is basic, something that will actually work, something that will help you to understand what's happening, right? So if you see sequential SMT occur here, it's within a window of time that we should expect a reversal due to the fact that there's a news event during that window of time. Then would you expect price to go lower or higher? Obviously we would expect price to go higher, right? First of all, these highs are too clean right here, right? And it's basically that simple. Right, looking here, from we dropped from this high, which is, I'm pretty sure that everyone in the class of 25 remembers this, right? So dropping from this high, and now we're looking at the euro dollar. From this high, what occurred, right? And now we're going to be focusing on how important this thing is, how important having a correlation is, how important sequential SMT is, right? How important SMT is, right? So here we had this high form when? In July of 2023. Then in September of 2024, this high was formed, right? So this was formed in 2023, this high was formed in 2024. Looking at the Great British Pound, this high right here of July 2023 was formed, you can see, at the same time as this high. And this high was formed at the same time as the high that was formed in the euro. But these are two completely different highs, right? Looking at the Great British Pound, this high pierced the high of 2023, but that one did not, right? And this is what makes this concept, so new. It's not just SMT. It's not just a cracking correlation. This is sequential SMT. It's a sequence, right? This is the sequence that price must follow before it reverses. You've seen it occur if you're the person that has been backtesting. Yes, yearly sequential SMT yearly sequential SMT, not yearly sequential SMT. This is sequential SMT between the quadrennial cycle. So the quadrennial cycle is comprised of 4 years. No, I haven't taught that publicly before. Right? So the quadrennial cycle is comprised of 4 years. Right? Each previous year, right, is reflected upon by the upcoming year or the current year. Right, so you can have sequential SMT between 2000. You could have sequential SMT between 2001, 2002. You can have it between 2027, 2028, as long as it's, you know, in sequence, right? So there was a lot of liquidity, and this is the magic, right? According to my theory about sequential SMT. The previous cycle is high or low, right? There is a lot of liquidity that's built up above or below it. Whenever you have a correcting correlation, the price engine just clicks and voila, price reverses. It's not that hard. And it's not something that has been taught before, you know. I have spoken about it, right? Because the base of this thing is what? It's quarterly theory. That's what it is. So a quadrennial cycle is comprised of 4 years. And this is how you use it. Right? So there are times when we will have SMT and it won't be, you know, sequential, and you will have price slow down or reverse as well, right? But that is just because there is something else that's in play. Looking at this right now, there is something else in play, right? Anyways, here at these lows, you can see that the euro took this low out. The British pound did not. But due to the fact that there is SMT here, we had a reversal. Right? We had price slow down. Do you see how simple it is? Whenever there is sequential SMT, okay, it's time to take a trade. If I'm trading and then SMT occurs in the opposite direction of my sequential SMT, I'm just going to get out of the trade. So now you have something that will put you into a trade. Then you also have something that will take you out of the trade. Right? That's what it is. It is that simple. It is that simple. Right? So here you can see that, right? And I will use the crosshair right now. And I need you guys to go into your charts and, you know, study this yourself, right? So this is the daily cycle that we're using right now, as I previously talked about, right? And the goal of this is not to, you know, definitely not to just be hold. Oh, I'm just going to get in and hold forever. No. Right? You have a specific amount that you're willing to risk, right? Personally, I am only interested in, well, most of the time I'm only interested in 1 to 3. I don't really care about holding for too long because I know that, you know, this thing will repeat over and over, right? So anyways, here during this time that we had a news event, right? Remember, we had a news event. What happened? Price traded below this low. So this is the, and this was the low of the day, by the way, right? right? So this is, and I am not, highlighting anything on the chart due to the fact that I need you guys to be able to, see this without, having to draw any lines or anything like that. So next week we'll start doing a bit of highlighting, but due to the fact that now I need your minds to just, be active, I need you to be searching for, what to understand, basically. So here, the gray area, this is the S&P 500 right here, right? The chart that is all the way to the left, right? The S&P 500, the gray area, that's the agent session. Here, this is the London session. Give me 1 second. I do not want my computer to die on me while I am having this session. So let me just plug it in. This is a good one. I was talking and Lawson is like, too much. Alright, that's why they're here, to help me to not say too much. Oh, Jacob, I'm sorry. You guys have a similar, it's the color scheme of the pictures. I'm so sorry. So yes, here, let me just, make sure that I put everything here. So, and using this right now, you'll see that, okay, this is literally how Daye uses his own indicator, right? Pretty simple. Daily cycle, 50-minute time frame. You can literally just use this right here, right? So here is the agent session, right? Agent session right here. Then right here we had what? The London session. Then here, what do we have? The New York session. So during the New York session, price traded below the agent session, and more importantly, it did trade below the London session. Looking at the ES, the S&P 500, and the Nasdaq, but looking at the Dow, during this specific session, the New York session, it did not trade below its London session. Now this is where we had sequential SMT occur. Can you see that? This is where we had the correlation occur. This is where the trade formed, basically, right? And this was actually beautiful, right? So this is the gist of it, right? You're going to relate the cycle that you have in news event, right? So here, reflecting upon here, should give you here the expansion, right? For some of you guys that need to see this. And remember, right, we talked about expecting higher prices. We talked about, and when you hear me say, oh, I expect higher prices, it doesn't just mean that we just expect price to go higher and higher and higher. It means that if we see a pullback in price action, if we see price drop, but I've been saying that we expect higher prices, it means that the setups, the sequential SMTs will be directing price higher, right? So that's it. Sequential SMT between what? Q2 and Q3. For 2 or 3 of the assets, when was the low of the day formed? During Q3. For the other asset, when? During Q2. So all that you found is useful. I'm pretty sure that you will. Right now it's like you're getting to understand, more. Right now it's like, oh, Okay, now I understand this. That's why you talked about that. Yes. Yes. So now I hope that you found this useful. I hope that you really focus on the daily cycle and the 50-minute time frame. And we will be back next week. To be honest, next week I'll be, I want to be even more active, right? Because I'm actually starting to feel better now, as you guys can tell in my voice, as you guys can tell by how long I've actually been talking, right? Because we had a live stream first, and then that was, cut off. But I'll try to see if I can pace those live streams together. I'll just post part 1, part 2. But yeah. Anyways, how about you guys, found this useful? It's amazing, as you guys would expect. And we will talk again. Ciao. Good evening, everyone. Right. This is our first live stream of the week. Of course, it's Wednesday. Right. Wednesday is the day that we will drop this. Always have sauce just being dropped. And, I am much better now. Like, as you guys might have known, for the past few weeks, I have been going through some, issues, medically speaking, right? Health-wise. But now everything's fine. You can still hear it in my voice, but we're okay, right? Anyways, don't really give a shit about that. Just letting you guys know that we'll be more active, right? It won't just be Wednesdays that will be going live. There will be times that, we'll be having some random lives at Saturdays. On Saturdays, where we'll be doing Q&As, right? I'll be looking at your charts, you posting your charts, you jumping your charts in the chat, and we'll be going over everything just to make sure that everyone is on the same page, right? Let's go. So as you guys can see on the screen right now, this is the main thing, and we always say this is the main thing. This is forexfactory.com, right? This is where we'll get the times, that our trades will form, or the times around, that our trades will form, right? And obviously you guys can see that it's usually Q3 of the daily cycle, which is the New York session, right? Q3 is the best time to trade, right? The best time could be Q3 of the year, could be Q3 of the month, could be Q3 of the week, could be Q3 of the day. That will always be the best time to trade. If you just stick with Q3 or Q3 within a Q3, I can assure you that you will, be more accurate than you already are. Right? So yes, whenever, and okay, this is something that I haven't even told the class of 2024, and of course now it's going to be out there now. On Twitter, everywhere, but who cares? We always have information. We always have a lot of information, right? So anyways, whenever you see, weeks like this where you have high impact news events on every day, right? High impact news events on every single day. When is the day that you should expect the highest probability trades to form? When? On Wednesday. Oh, someone already said Wednesday. Oh, you're smart. You gotta be from 2024. So yes, the trade will form on Wednesday, right? It will form on Wednesday, not Monday, not Tuesday, not Thursday, not Friday, but Wednesday. That's the day that you will see your sequential SMT. That's the day that you will see the other cracking correlations, right? Whenever you have less than 4 high impact days, then those 3 will usually, be similar in regards to presenting high probability moves, right? And this is very specific also for whenever you have a week that ends with NFP. And NFP always forms on when? A Friday. The first Friday of the month. That's when you have NFP. Right? So here we have every day high probability. That equates to a low probability week. When you have every day being, showing high impact moves. Right? Wednesday will be the day to trade. Right? And, coincidentally, we have ADP, non-farm employment change. Then we have NFP on Friday, right? So tomorrow we'll more than likely have prices continuing in the direction that, price has presented itself so far. And Friday, if we see sequential SMT, if it's bearish, it doesn't matter, right? If it's bearish, price will go down. If it's bullish, price will go up. That's just what it is. And here you can see that we have, and just to be clear, everyone can see what's happening, right? Everything's clear, because I was having some network issues a few hours back. Okay, that's amazing. Here you guys can see what happening. First of all, there's a lot of chop happening right here, right? But guess what? Price is still respecting the sequential SMT that occurred here. Right? This is the last quarter of the last year. This is the first quarter of this year. We had sequential SMT, S&P 500 failed to break below this low, the Nasdaq failed to break below this low, and we had the Dow break below this low, which initiated bullish price action. Right? So after this candle is formed in price, and here we expected higher prices, price broke above this high, just barely pushed above these candles, almost went above this high, but it dropped, of course. And this was due to, unforeseen things, unforeseen events, right? But just because we have unforeseen events, that does not, invalidate our bias. That does not invalidate the sequential SMT. And yes, we're back. So yes, as I was saying, how much of you guys, lost interest in our bias? How much of you guys? Right? Whenever we had this happen here, how much of you guys thought that price was going to take this low out? Tell me. You see, everything that occurred here is normal. Everything. Remember, once we have this, you never saw me come here and said that, okay, now we're going to take this low just because this happened. Just because this single cap candle, within this fair value gap here, we're going to just take this low out now. No. Our bias remain the same until proven otherwise. Still, we're expecting price to take these highs out. Still. Why? Because it doesn't matter what happens here. Okay, anything that occurs here is just happening so that price should get in line with this SMT, right? So you'll just see a lower time frame cracks in correlation and another lower time frame cracking correlation until price gets in sync with the higher time frame cracking correlation, and then we just turn around. Right? That's what is going to happen. That's what usually happens, especially within these times, where we have planes just falling over the sky. Falling over the freaking sky, man. Going 400 miles per hour. And did you guys see the shit that happened in Philadelphia? Every day there's some aerial, incident. And that shit was insane. I have family members there. Right? That shit was crazy. And none of these things are random. In my opinion, they're not. I don't want to sound like a conspiracy theorist, but when you have planes falling out of the skies every other week, when this shit never used to happen, it starts to get fishy, doesn't it? Why is this happening? Is there something happening that the government isn't telling us about? Maybe we have fighter jets falling out of the sky, just falling, just dying, right? Just, to me, sounds like, EMPs. Anyways, whenever you see this type of price action occur, it's usually, just to get in line with the higher time frame bias, because this is our bias, right? Sequential Sant, that is our bias. Once it happens, okay, we expect price to go higher, right? If it occurs and, it's a bearish sequential Sant, then we expect price to go lower. And once you have the highs being symmetrical like this, meaning that this is a lower low that formed here, and then this is a lower low, another lower low that formed here, and then this is another lower low that formed, a lower high that formed here, my bad, a lower high that formed here, another lower high that formed here, then we're going to expect price to take this high out, right? Then create a cracking correlation that would either allow price to pull back a bit or allow price to just go lower. Here, this is something that is significant as well, right? From this low to this high, right, this range, price falls below the 50%, right? Within this fair value gap. Here, what happened? Price did not only fall below the 50% of this range, right? So here you can see price fell 50% below this range. Same range here. But what occurred here? Price fell below the 75% of this range, right? What a real correlation occurred between the S&P 500 and the NASDAQ, whereas here we have the NASDAQ, right? While price fell below the 50% within the S&P 500, it did not fall below the 50% here, right? Which is what, caused, one of the reasons that we had this range-bound expansion, right? Just introduction to that, to be honest, right? Also, you can see that right here, we had price trading below this low. Right here, it did not trade below this low, right? So here we had SMT, that was sequential, of course, forming within this gap. This is how you use fair value gaps actually, right? Especially when you have these higher time frame fair value gaps, like the daily time frame, right? Price falls within the gap, goes higher, falls again, creates SMT, then trades higher, right? Of course, the SMT is in line with the higher time frame SMT. Lower time frame cracking correlations will just cause pullbacks that will get in line with the higher time frame, right? Here you guys can see, and this is something that you need to practice. This is something that you need to study, because we have, this is the main thing that we have introduced thus far. But trust me, 1 month of back testing will not help you, right? 2 months won't help you. You need to really dig deep into this, right? Here, what can you see that's occurring here? We have sequential SMT occurring within the monthly cycle, and now we're going to get the sequence of how it should occur, right? You need to, match the 4-hour time frame to the monthly cycle. That's how you do it, right? So here, during this quarter, we have price trade below this quarter's low. Then price expands. Here, price failed to trade below this low, which is what caused the cracking correlation. Here, price trades below this low and expands. Right, this is the forward time frame. When using the forward time frame, you need to be sure that you are, functioning within the monthly cycle. And remember, we expected higher prices. So it doesn't matter what occurs on, if you see price just gaps down, then that's just gapping down to create a bullish sequential SMT. Right? Now here, and there will be an introduction of, a concept right here. Right, we'll be looking at the, just introducing real order blocks, just how to look at real order blocks as well. But anyways, this is another lower time frame sequential SMT that occurred. So now this is the third sequential SMT that occurred right now. Right, so the class of 2024 will benefit from this one as well. But I am actually trying my best, right, to see, and this is why I just took 200 persons in, right, just 200, or a little bit over 200, right. I want to see how fast I can get you guys to be good, right. That's the goal. Can I do it in 8 months? Like, what is the, when do you guys become profitable? When do you guys become, good at reading price action? When? Anyways, here you can see that this is the weekly cycle that's comprised of, right, this is the weekly cycle, my bad. This is the daily cycle, right? So daily cycle comprised of 4 sessions, and this lower part right here, this green that you see down here, that is, depicting Wednesday, or the third quarter of the weekly cycle. Right here, where you see this higher low being formed, right? When does it occur? And this is very important, right? It occurred within this Q3, occurred within this Q3. This Q3 is when? New York session. When is this Q3? Wednesday. So you have Q3 within Q3, and that's where you get your high probability sequential SMT. Right? Explosive price action. Right? So if you're a person that you have the patience, the discipline to just wait for Q3, or just literally just, one session of every week, right? Then this is a model that'll work for you. Right? If you're a person that you have a enormous amount of money, you just want to grow your money, you just want to grow it steadily, right? You just want to, you're a guy that's already patient, you've been in this shit for a few years now, then this will work for you. Of course, this will work if you're a person that wants to trade the lower time frames as well. You want to trade the 5-minute time frame that goes with the 90-minute cycles. Then you can, just be using the third quarter of the day and the third quarter of the 90-minute cycle that's within the third quarter of the New York session. And that will be your Q3 within the Q3, and then you'll find even more opportunities there. Right? So Q3, within Q3, the lower time frame cycle will give you the sequential SMT. And here we see price failing to break below this low. Here, price failing to break below this low. And then within the Dow, price broke below this low, then expanded high. Here, right, and specifically, right, the 1 hour time frame for this specific concept, write this down. The 1 hour time frame goes with the daily cycle, and then you will see that the 50-minute time frame goes with the 90-minute cycles. right? And so on. The daily the weekly cycle goes with the daily cycle for this specific concept, not the sequential SMT, but what I'm going to talk about right now. Right? So here, and for this I will use the crosshairs. And just due to the fact that I have taught the class of 2024 already, they already know what this is. And I've never really talked about this before. What is this? Right, so this is your real order block. This is the real one. Not those, just down close candles and price trade. No, that doesn't work. There are steps to this. First, you must have sequential SMT. Right? Sequential SMT. Then you will see this. Right? And this usually occurs before the sequential SMT. So this occurs prior to the sequential SMT. You have this. So here you see a down close candle within the Dow. Then you have a up close candle within the Nasdaq. Then you have a up close candle within the S&P 500. Right? No, it's not frozen. I'm just not moving anything. Right? This is the 1 hour time frame. It is, very specific. It goes with the daily cycle. Right? So this is a correlation where you have what I will call a precision block, not an order block, right? And you always, and going forward, you hear the word precision a lot, right? So here, this right here would be what ICT would want the order block to be, basically. Right? Once this candle occurs, afterwards, there's usually volatility that follows, right? The open of this candle can be used as how a true open is used. Price will wick below, then go higher. Right here, below, higher, open, below, causes sequential SMT, and it has to cause sequential SMT for it to be valid and higher. Anyways, here you guys can see, right, we had sequential SMT here. This is the 50-minute time frame, and whatever we're looking at sequential SMT, this is how we will look at it, right? Daily cycle, 50-minute time frame, right? Price trades below the true day open, expands above the true day open, falls below the true day open again, right? So now you guys are just remembering the true open. Right, the true opens are very important. Right, very, 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 very important. Right, price trades below the true open. Right, creates a failure swing. Same thing occurred here. Trades below the true open, creates a failure swing. Right, and we only see failure swings whenever they're sequential. Right, which means that this quarter right here, for this to be considered as a failure swing, right, means that it must not go below the previous quarter, right, to occur here. But here, true day open, price traded below it. Remember, below true day open you buy, but that's not all that it is, right? Below true day open you buy if there is sequential SMT. Do you get it now? So you can literally just take what's here right now, right? What's here right now, right? Concepts that are specific to our community, and fuck off, as Lawson just said, right? Of course, there are things that will make you way better. But here, you have everything that you need. The 15-minute time frame, I've told you, you can write it down. Go and study it. Right, the 15-minute time frame, the daily cycle, and the true day open. You have 3 things right there. And We barely have begun the second month, right? That's just three things. You already got what you paid for, right? Of course, there's more things, but to be honest, just take this, write it down, put it on your wall. Just look for this every single day, right? And you'll see how better you've already become, right? Because now you have rules. Okay, there's sequential SMT, but it didn't fall below the day open. Then it's not valid. Okay, price fell below the day open, but I see no SMT, then it's not valid. Okay, I see SMT and it fell below the day open, but it's not sequential, then it's not valid. First of all, price must below the true open, right? And this is fractal, so you can apply it on any time frame that you want. Price must fall below the true open. There must be sequential SMT. Are you understanding what I'm saying right now? There must be sequential SMT. And if you're trading within Q3 within Q3, or you're watching price within Q3 and Q3, then it becomes even more high probability. You see, these things, this is not random right here. Remember, I laid down the concepts for you. We talked about them. We explained what SMT is, then we explained what sequential SMT. You already know, if you watch my YouTube video, you know what the true opens are. You understand that price is fractal. That's the reason that I posted that YouTube video, just for the basic understanding. Now you have a working model. Something that actually works. It's right there in front of you. If you didn't understand time, which is the most important part right here, because listen, we had a news event that was scheduled for around the time that we had this low form. Around the time that we had the low of the day form right here. Right? The low of the day, it formed right here. Whenever you have the low of the day form within, and then the low of the day usually forms with sequential SMT, by the way. Of course, it's going to form below the true day open. Right? The other assets will usually, provide this type of price action failure swings, right? So yes, now I want to see, you need to be going into your charts and looking for this. You need to write this, put it on your wall, if you're new, of course. Okay, I won't do anything unless I see this occur. Right? And just because of that, what does that mean? That means that during the Asian session, I won't do anything. Even if there is sequential SMT, I won't do anything. Right? Okay, you have sequential SMT between the Asian session and the London session. You can do something within the London session. If it occurs within Q3 of the day, New York session, remember using the 15-minute time frame. Right? And this doesn't mean that, I have to execute on a 15-minute time frame. No, it means that this is where you'll expect price to go down the most for the entire day, right? You had news here, price dropped below the true day open. Then when you see this candle right here form, right, you can drop to the lower time frame and look for your fair value gap. Then that's when your fair value gaps will work. That's when your breakers will work. When you have a cracking correlation. You have to be very specific. Very, very specific. You can't just be trading, I just feel that price will do this. You need rule-based conceptual methods. Things that have worked in the past many, many, many more times than they have failed. You have to be strategic. right? It's not a game. You're basically here preparing for, your future. You're here. Why? Because you want to be financially free. You don't want to go to work anymore. And this will help you to do so. This will help you to understand what price is going to do. With that being said, right, so again, this will be posted in 2 parts. The first leg will just be posted part 1, and you'll have this as part 2, or I could just combine them. I believe that I can just do that. I can just combine them. I'll just combine them. Right? So yes, we will definitely be back on Wednesday again. And maybe if I have time this Saturday, right? Or Saturday or Friday, maybe, as long as I have time, right? But the deeper that I get within this month, the more time that I'll have, because there are certain things that I'm just, getting tired of. I'm just like trying to tone down the amount of work that I actually have to do. So yes, with that being said, I hope that you guys found this useful. Hope that you guys study this. Right? Please, prove me wrong that this shit doesn't work. Prove me wrong that this shit doesn't work. That being said, good luck and good trading. Good evening, everyone. Hope that you guys had a wonderful trading week so far. If you haven't taken any trades, I hope that you learned from, just watching price action. Right? This week was not the easiest week, obviously, right? And we're going to show you why it wasn't such an easy week and how to predict these types of weeks, right? And remember, we have been saying that this week would not be easy. And just by looking at the economic calendar, you can see that, correct? You can see that we have every day being a high impact news event. And whenever this type of schedule is released, we just focus on Tuesdays, Wednesdays, and Thursdays, right? Especially due to the fact that we have CPI, right, which will usually form the high or low of the week, as long as it causes sequential SMT, right? So whenever we see price action like this, right, just to make this crystal clear so we don't have to talk about this anymore, once we see price action like this, a scheduled news release like this for the week, where you have 1, 2, 3, 4, 5 days having high impact news events, you just focus on Tuesdays, Wednesdays, and Thursdays. As easy as that, right? And here is where we had all the quote-unquote sauce for the previous session. The audio wasn't recorded for some reason. I'm terribly sorry about that. So here, right, you can see that this is where, we have our Fibonacci's. This is our range theory, right? For it to be classified as a range, right? And there are many ranges, many types of ranges, but this is just one that will help you to know what price should or should not do, right? So below the 50%, that is discount. Above the 50%, that is premium. In premium, 50% range, price is expensive. Here, price is cheap, right? Very low. Before this range was formed, we had sequential SMT between the quarters of the year, right? Right, this is one of the, and we've said this before, on the formation of this candle, these sequential SMT basically don't need anything else but just that SMT, right? Once the sequence is right and you are, above the weekly cycle, then it's almost, I don't want to sound cocky or anything, but it's almost impossible for it to be wrong, right? And this is why we've we have always been screaming higher prices, even when this chop was occurring, right? Even when this was happening, when price was just going back and forth, we still wanted to see price above this, above these highs, right? We still wanted to see the NASDAQ shoot above this high, right? And we don't pay much attention to the Dow, right? So the Dow isn't for trading, right? And I'm guessing that everyone here knows that the Dow is just for seeking, cracking correlations, right? Just as here. This is a concept that I call mirror premium and discount, right? So within the S&P 500, the gap within the lower half of this range was breached. It was filled. SMT occurred. Job done, right? Here, there was no gap here for NASDAQ, but we did see SMT occur below the 50% of this range right here. And the main reason why this is the low for our range is why? Due to the fact that this is the low that gave birth to the sequential SMT, right? This is a swing low, right? Whereas this was a lower low. So yes, and here within the Dow, you can see that we have two gaps, right? Two main gaps. One here, same thing for the S&P 500, same thing for the NASDAQ, right? That's necessary, right? You need to see these gaps right here all throughout this entire leg. You don't want any of them to be filled, right? It's just breakaway gap, price consolidates in this small candle, expands again, breakaway gap, expands. You can't go for this highs yet because we need to fill the liquidity voids, right? These are all liquidity voids unless you have sequential SMT occur within one, or unless you have mirrored premium and discount, whereas you have the S&P 500 trading below the 50% of range, achieving a sequential SMT, or, at the same time, you have the Dow doing basically the opposite of what this is doing in regards to the ranges, right? So the Dow is bullish in premium, while the S&P 500 and NASDAQ is bullish in discount, right? This is usually what you'll see, and due to the fact that these assets, their movement gave rise due to the fact that we had sequential SMT, but these assets were what caused the sequential SMT? The swing, the failure swing, right? Price failed to break below here, price failed to break below here, right? Which is why we see this deeper retracement right here. Whereas here, we broke below this low, sequential SMT. Just expect higher prices. Look how explosive this is, right? Very explosive move, right? And it's basically, basically the only thing that caused this right here. Well, not the only thing. There's something else here. But the main thing is the sequential SMT, right? That's what you need to understand, right? So yes, we still have price going towards, we're taking out this target and this one, and we would still like to see the S&P 500 take out these highs, right? Down here, right, we'll be looking at a lower time frame SMT, this lower time frame SMT right here. Do you see right here within this fair value gap? And this is what it looks like here on the 4-hour time frame, right? So here, right, we had price open the week, right, form a large new week open gap, right? So price opened, traded below this low, price traded back within the body of this candle, then we expanded, right? So first of all, the main thing that occurred here was what? It was not price trading in the higher time frame gap, right? Because you can see that even after price trading in the higher time frame gap here, it ran higher, then it just came back to take this low out. It's the sequential SMT that occurred within the gap,
right? So how do you use gaps? You wait for, and we're going to talk about other gaps too, right? And show you the indicator that will make it easier for you to see those gaps as well. Anyways, here, higher time frame gap, sequential simply forming within that gap. And remember, we were bullish. This is not just me coming here, right? This is not just me coming here and being like, okay, this is just what happened the past week, and I never pointed a finger at anything, right? The reason why it seems that way is just because we're not within, very easy price action, whereas you could just look at a chart for a few seconds and just buy. No, now you really need to be digging into the charts, right? Until we get out of this, range business right here. And here, for the NASDAQ, you can see that we failed to take this low out during this first quarter of the month. Price traded higher. Here, we took this low out, sequential SMT, and then price traded higher again. But it did stay within this range, and you can see that this is extremely low probability price action. Now, right, this is something, right, so that will help you to understand how the market moves better, right? It's pretty simple, right? These are new week opening gaps. This is the indicator that I usually use. So I have a specific template which just has new week opening gaps, nothing else. No marking, looking for no SMT or anything like that, right? Settings are here, right? I usually use 3, right? Due to the fact that I am comparing the current new week opening gap to the previous one, right? Usually. I use up to 5, up to 10 sometimes, but whenever I'm doing a comparison, then I just use 3, right? The goal is to find a current new week opening gap. So this current new week opening gap is the one from this Sunday of this trading week, even though this trading week is over, right? So this Sunday, this was formed, right? New week opening gap. This is the previous week's new week opening gap, as you guys can see. But here we have a new week opening gap forming within another new week opening gap, right? What does that make this gap? Now it's high probability, right? This makes it a high probability new week opening gap. Another thing that you will realize is that price tends to move from new week opening gap to new week opening gap, right? And whenever price is within a new week opening gap, that's when it usually gyrates around, right? As you guys can see here, back and forth, then it just expands. Found resistance right here. Fell again. New week opening gap. Formed within this higher time frame new week opening gap, or this previous cycle's new week opening gap. Price trades within it and expands, right? And here, you guys can see we are looking at the FX triad, right? This is the FX triad, which is comprised of the US dollar index, the euro, US dollar, and the Great British Pound, right? There are a few things here that are brand new. The first thing that I will talk about is this right here, right? So here we had SMT, right? As you guys can see. And this occurred before the sequential SMT right here, right? So we had SMT right here. Price traded higher, right? Same thing here. Price broke above this high, traded lower. Price broke above this high, and traded lower, right? Whenever you see something like this occur, right, where you have SMT leading to price going higher, but once price broke this high, you can see that we had I wouldn't call this a larger SMT, but the number of candles between this point, between this candle and this candle, are way more than the number of candles between this candle and this one. So we have a larger range sequential SMT than this one, right? So this, due to that, this becomes what? An SMT shift, right? Once price breaks above this high, this candle forms. What can you expect? Price to rush towards this low, right? Remember, well, most of you guys remember from Wednesday or stream, we wanted to see this fall lower, right? We already stated that this was the high of the week for the US dollar, and if that's the high of the week for the US dollar, then the low of the week should be in for the euro, and the low of the week should be in for the Great British Pound. So again, this is what you would call a SMT shift, just due to the fact that the number of candles in between this candle and this candle is less than the number of candles between this one and this one. That should be pretty easy to understand, right? Pretty easy to understand. What's another thing? This new week opening gap right here again. Yes, we're talking about new week opening gaps, right? Price traded above and closed above this new week opening gap, right? But here, what happened? After we had this SMT, and listen, this in itself could be a pretty good trade, right? Even if you shorted here and got out here, that would be a good trade. Of course, that would be a good trade, right? This is the 1 hour time frame. You could be trading on the 1 minute or the 5 minute time frame. It's easy to take 3 hours out of this swing right here, right? And then you could get back in here and here again. Anyways, due to the fact that, first of all, we have a larger range sequential SMT. This line and this line is showing you what? The new week opening gap of this week. And price trades within that new week opening gap as well. We have the SMT shift right here, which is a true market structure shift. And we'll get into that more as we go along. Here, SMT shift, price trades within this new week opening gap, creating a failure swing, while this asset takes out this pool of liquidity, and this one cannot do so. What's going to happen? We're going to see higher prices, right? Just as how we have been seeing, right? So the main component between all price moves and even, when we're not specifically looking for SMT, it's always there. It's always going to be there, right? Even right here, right? Where we see this candle trade below this one. Do you see that? That's SMT. That's sequential SMT, in fact, right? And why is that sequential SMT? We'll show you right now. And this is one of the main reasons why you do not want to do anything, right? Unless you see this concept appear in your charts, right? So for some reason, this template, that shows the daily cycle does not show for the dollar index. I'm not sure why, but it's whatever. So here you can see when did this occur, and remember this is fractal, right? And I'm going to tell you why. As my personal student, you will realize that or you will understand stuff more than everyone. Even if, someone sees this video right now, they won't understand. And you know why that is? Because they won't study. They will not put the work in. It does not matter, what information you get from me. It doesn't matter what you're using. You need to become a master at that thing. You need to be seeing sequential SMT without even seeing the templates at the bottom, right? You should be seeing sequential SMT in your dreams. And then you'll begin to understand. You do nothing without it. It's a rule. Is it possible to do something without it? Of course. But why would you want to, right? So yes, here we had the high of the New York session for the US dollar index. A failure soon was made here where price failed to break above this high, right? And this occurred when? In the afternoon session. Here you can see that price did trade below this low right here, causing what? Sequential SMT, right? So here, the high today for the US dollar was formed by in the New York session. The low today for the euro was formed in the afternoon session, and the low of the day for the British pound was formed by. And when we're referring to the low of the day right now, we're talking about the time after the true open of the day was established, right? So we're not talking about the Asian session right now. Just talking about what occurred after the Asian session, right? So we dropped below the true open, expanded, there was sequential SMT, and then the rest is history. I hope that you guys got something useful from this. I am terribly sorry about Wednesday. Not sure what happened with my microphone, but yeah, that's it. So yes, I hope that you guys take this information, study the shit out of it, right? Over this weekend, I'll be doing a lot of backtesting myself. And yeah, if you have any questions, hit up the assistant, Jacob, Lawson, Medic, preferably Jacob or Lawson or Medic. But yeah, hope that you guys have a wonderful day.
Hello everyone. Pretty sure everyone can see the screen now. So this one should be pretty good. We're going to be talking about a concept which, as you guys can see, people from 2024, they've never heard of before. Well, from me, I don't know if it's been out there, but all I know that this is how I found this thing, right? It's compressed liquidity, right? So anyways, you guys can see that on the screen right now. We have forexfactory.com, right? That's when we're going to get our scheduled times, to expect liquidity insurgent within the marketplace, right? On Monday, you can see we had bank holiday, which meant that we're not going to do anything Tuesday, right? Then on Wednesday, you can see that we have FOMC meeting minutes, and something to understand is within the afternoon session, right? It doesn't necessarily mean that the sequential SMT or the cracking correlation that you're looking for should form within a specific quarter within the afternoon session. Once it's occurring within the afternoon session, which means you could have news coming out at 4 p.m., but that's the afternoon session, right? You can look for a sequential SMT at any time after 12, right? And Thursday, tomorrow, we have unemployment claims. And Friday, we have some other news events that aren't that important to us. So here you guys can see that this is why we have been bullish for so long. right? We've been bullish for a while now, right? And even though we went through a lot of ups and downs and consolidation, you can see that price, almost bend to the will of our concept, right? So here you can see that we have yearly sequential SMT, right? So we have sequential SMT between 2024 and 2025, right? So this is the lowest low of 2024, and this is the current lowest low of the yearly cycle that we're currently within. Here again, you can see that price failed to break below this low, but with the Dow, which is usually when you get, the best, highest probability price action, is whenever you have the S&P 500 and the NASDAQ in sync, and then you have the Dow, breaking correlation. All of this is what made price go higher, right? So now is when it will get a bit, well, not a bit interesting, really interesting, to be honest, right? Right. So here you will learn about compressed liquidity and spotting high probability change in the state of delivery. Right. So the first thing to note, right, is that at these lows, it's clear that we have sequential SMT, right? And the reason for this, and you can, use this time to look at your Dow chart, right? Same time frame, 5-minute time frame, but you need to be, on the 90-minute cycles, right? So I could turn off the daily quarters, and all we, should be looking at is the 90-minute cycles quarters, right? So here you can see that between Q3 and Q4, price failed to break below this low right here, right? You can see that. And I could make it a bit clearer for you guys, of course, by introducing the Dow on the side, right? So I need to use the crosshairs for this. Between this quarter, right here, right, between Q4 of the previous cycle that we're just getting out of the previous 9-minute cycle, you can see that the S&P 500, the lowest low is this right here. And for the Dow, that is its lowest low. So after all of this occurred, that we had price expand higher, we had another SMT, which sent price lower, right? Right here, due to the fact that we had this SMT, and this candle right here, right after price breaks above this candle, right here, looking at the S&P 500. So yeah, this is the last 5-minute candle, right? This is the 5-minute candle that instigated this move right here. So once you see this candle trade above this one, that is a change in the state of delivery, right? So price dropped, we had sequential SMT, went higher, broke this candle. Once you see this gap form, after the change in the state of delivery, do not expect price to fill that gap again, right? So right here we have a small gap, which you can see that was entirely overshot by price. This was balanced price action right here, and due to the fact that we had sequential SMT, that made it even more high probability that we will see higher prices. So someone could literally, just based off of sequential SMT, just buy while price is below the 50% of this range, from this low to this high. Given that within the other asset, this closely correlated to it, there is a cracking correlation between those two, right? So here, the Dow traded below this low here, and
just so we can be more clear. You'll get the indicator here too, right? So here you can see blue shaded area. Here again, blue shaded area. This low fails to break below the lowest low in the green shaded area. Whereas here, we had price trade below this low. So there's a lot of sequential SMT that occurred today, which is why you're gonna see that, you know, today was very exciting, full with a lot of opportunities, right? Even the high here, that was SMT. When price dropped below the 50% of this range right here. So from this high, I'm not sure. Okay, this wasn't done correctly, that's why. So from the range from this high to this low, right, due to the fact that this low was caused by SMT, and this high here was caused by SMT as well. We have price pulled within the 50% of the range. Remember, we do not expect price to break below the breakaway gap. But here, you can see that the Dow pulled down and created another sequential SMT, right? And this is primarily why you need to not, you know, try to trade the Dow, right? There are times when it will be high probability. There are times when you will still get a proper trade, but eventually, you know, price will come back down and take everything out. Right? So yes, the Dow broke below this low, created sequential SMT. Meanwhile, here we had another failure swing. So now, since we see why we had all of that movement, now I can get rid of the Dow. It just clutters my screen. And here we are again. So we talked about everything here that caused, you know, the main reason of the reversal. But now you need to know why you should expect a reversal in the first place, right? So all of this right here, right, from this, and we'll get in another one of these vertical lines right here. So all of this right here, you see from here, this is a 90-minute cycle, right? And this is why I would have exited all of my trades right here due to the fact that this cycle is over, right? Of course, it went higher, you wouldn't need to do that, but you know, if you're a person that you don't like being around the computer too much, you know, at least you'll take something off right here. So yes, this right here is what you use for day trading, right? This is for day trading. The 5-minute time frame, the 90-minute cycle, that is for day trading, right? That's for, you know, going in for a few minutes and getting out. It's not scalping. Scalping is using the 1-minute time frame, all right? Well, anything below the 5-minute time frame is scalping, to be honest. So anyways, how do you know when to use sequential SMT when there is not a higher time frame sequential SMT, when there is not any higher time frame levels to use? So basically, it just seems like price is just out here, you know, in the air. There's nothing for price to react to. Here you can see the first sign is compressed liquidity, right? Compressed liquidity is characterized by using the range of this swing right here. So this is the first swing, right? And the reason why this is important is between this high and this low is where we had the candle which initiated the run up. So this is the candle that you would be focused on and waiting for price to trade above in order for you to, be able to establish that, price has changed its state of delivery, right? So this high, this low, the 50% of this high and this low, you're going to split it in, you're just going to split from this high and this low in half. You'll take the measurement of that, which is this right here, right? So this right here is half of this range, right? Right there. So that's why you have these lines right here, right? Which show you the high of this range and the low. And here you can see the price fell down and dropped within the top half, the premium of this range, and then continued higher. So anyways, this is the measurement, right, of half of this range. Compressed liquidity, right, it must continue for at least 3 consecutive quarters. So when it's 4, it's high probability, right? And this is what we call compressed liquidity, right? So this is the measurement that we took from here, half of that range, and this is the measurement that we took from here, half of this range. Here, right, we're going to take this so everyone sees that it is the truth, and we're not trying to trick anyone, right? Whenever you see a price like this compressed, and this is how you know that price is compressed, and this is even, it's fractal, right? So it's not just, it just happens on the 5-minute time frame. You can use it for the weekly time frame. You can use it for the monthly time frame, right? And the only time, this becomes our target is when we have the sequential SMT. So while this is occurring, you can anticipate this to happen, right? So this is basically what, Michael would want the, I'd say, the market maker buy model to be, right? But you can see that it has very, very, deep levels of understanding that you need to actually know what's going to happen. How do you know that this is where you should aim for? Or do you know that this is the buy side liquidity when it's compressed? There is no sequential SMT app happening here. There's nothing happening here that makes sense. It's just consolidation. But how do you know consolidation is consolidation? Because this right here, people say this is consolidation. This is me seeing, price priming itself to reverse. So while this is happening here, right, you see the compressed liquidity, you know that, okay, price usually aims after this type of price action, right? Of this specific measurement from this low to this high, half of the range, make sure that price is just within that, limit. Doesn't go out higher, it just stays within. Then here, you can see that we just had price run off, right? So this is the quarter that splits the compression and the, actual place that you'll see the move occur. So here is where we have a new cycle, a new 90-minute cycle. So here we had the Asian session. Well, this would be considered the Asian session for the 90-minute cycle. Well, the first quarter. Then here, the true open was established. Draw it out in time. It'll be right around these levels. Price falls below the true open. What are you waiting for now? You are waiting for sequential SMT. So this happens, you're like, okay, that's not sequential SMT. We see price rally, shift, structure. But this is not confirmed as a shift in market structure unless you see the sequential SMT form. So while price is trading here, failing to break below this low, we're going to have the Dow making a lower low here. Once this candle closes like this and price trades above it, then that's going to be your change in the sale delivery for price. Then that's when you're going to see a breakaway gap form, which price will not, return to,
unless it's done doing its business, getting the liquidity here or whatever, then we see price expand. So again, compressed liquidity, we had just a quarter of a break right here, right? But as long as before this immediate quarter right here, which comes after here, you can find it, right? And there are times, of course, when you have the compression start right here, but there's only one, quarter that you can use to, initiate a lag in price. So here you'd say, okay, price lags here, then the next quarter starts, right? And of course, here, right, we're taking 4 quarters. It doesn't matter, right, as long as it's immediately before Q1 of the upcoming cycle or immediately before Q4. Another thing that will make this higher probability is when you introduce new weak opening gaps. Oh yes, you didn't see this one coming. So this basically, right, I could have literally just told you, look out for the compressed liquidity and just expect sequential SMT here, and then yes. So here we have the new week opening gaps. Once you see price, and you don't even need sequential SMT to know this, but of course it helps. Once you see price just consolidating around that area, right, below the true open, then you can expect price to take out this, buy side liquidity right here, right? So this is, some of the tools, right, that you now have that you can use for day trading or any type. You can use it to scalp, really. But this specific time frame goes with this specific cycle, just as how the 15-minute time frame goes with the daily cycle. So there are people that would rather trade the daily cycle, and there's nothing wrong with that. But this is my favorite, to be honest. So here again, we'll be looking at the sequential SMT that occurred this afternoon. From this range, you can see that price fell below the 50%. Here, within this range, price fell, but did not fall below the 50%, right? Which is typical to expect whenever you don't have a fair value gap right here, by the way, and that's a gem. Right here, you can see that due to the fact that we had the fair value gap at the 50% of this range, price fell within that fair value gap. Then here, within this range, price completely fell below the range, which is what caused sequential SMT. And also, we have a higher time frame sequential SMT that is also underway again. So I hope that you guys found this useful. This right here is something that you should take your time to study. And of course, if you have any questions, please just shoot them at me or members of the staff. With that being said, good luck and good trading. Second. Hello everyone. Hope that you guys had a wonderful training with us for. I hope that you saw enough that would help you. What do I mean by that? You saw enough that would help us. The main thing that you guys should be doing right now is back testing and forward testing, right? Of course, there's some of you right now that have been here for years, meaning, you've been in the industry for years. So, you're passing your challenges, you're already trading, you just came in here for a little sauce that might have assisted you already. But for those that are new, you should be forward testing, meaning that you should be watching current price action, whichever session that you choose to do so, right? And this is the actual, important information right now that I'm telling you, not some concept, right? Some brand new concept that you've never heard about before. But, these, short messages that I'll give you, these tips that I will, hand over to you, right? It's the thing that is hard, the thing that is boring, and that is what will actually help you. That will help you to find, your own stuff that no one else could see before, right? You'll discover something, you might discover something if you look long enough, because there's a lot more that's there, right? In comparison to what I have talked about thus far, and in comparison to what I will speak about during the course of this year, right? So with that being said, let's begin. As you guys can see on the screen right now, we have the economic calendar, right? One of the most, overlooked tools in the trading industry, right? People really use this thing, right? On Monday, you can see Monday, Tuesday, these days right here, I would categorize as no trade days, right? Just due to the fact that, we have these news so late down into the day. Here at Tuesday, you could see that we had President Trump speaking, which is just some, if anything is random in the marketplace, it will be whenever the president speaks, right? That's usually the only thing that you can't really anticipate, whenever the president is going to speak, right? Usually after days like this, where you have Trump speaking, you have, whoever important person speaking that can have an influence on the way the market moves. The day after, whereas we have a blank day, we should see sequential SMT form here, or if it forms there, it will be high probability, right? So yes, here on scheduled news events, and then you have a blank day. It's Wednesday, Q3 of the week. There we go. And then Thursday, which is today, on Wednesday, my bad, right, is a day that you'll see sequential SMT form. On Thursday, which is tomorrow, you should see the continuation of whatever occurred here, right? So if this propelled the market down, Wednesday should propel the market down as well. And Friday should return the market to the range that it formed over the course of this week. Here you guys can see that we have the FX triad, right? Very important, right? The FX triad is important, and the futures triad is important. And, as this may sound weird, but the FX triad is more important than the futures triad, right? It influences the futures triad more than the futures triad can influence it, right? So here you can see that we had a cracking correlation here, whereas the dollar index pushed above this high, the euro pushed below this low, but here we had the British pound, just forming a swing low. So at times like this, right, when you have SMT, it doesn't have to be sequential. It could just be regular SMT, right? And one candle will, give you confidence or help you to spot whenever there's a reversal, because it's not that SMT doesn't work. It's just sequential SMT that works. That's not the case, right? The thing is, sequential SMT works, and SMT works in specific conditions, right? When specific things follow the formation of a SMT. So here, you can see that, and I'll put a little bit of lipstick on the dollar index. Here, this candle right here, and for those of you that need this, I'll turn the crosshairs on. As you guys can see, this candle right here, right, is a up close candle for the dollar index. What does that mean? That means that for the other candles to be in line with the dollar index, right, every candle should oppose it, right? If you're looking at the euro or the British pound. So here on these candles, and I'll start here, this is a up close candle. Right here we have a up close candle in the dollar index. That's a down close candle for the euro, and that's a down close candle for the British pound. Here we have a up close candle for the dollar index. That's a down close candle for the euro, and that's a down close candle for the British pound, right? So everything here is in line. This is what price should actually be doing, right? And before talking about this specific candle right here, we're going to talk about this one right here, right? As you guys can see, this was, in perfect correlation. There is nothing wrong here. This is just a regular day, which is why we saw price just pull back and went higher, right? Even though this was quote unquote SMT already, right? This was already SMT, but we did not have this candle, formed as yet. So here we have this candle. It's a down close candle. Within the euro, it's a up close candle, but within the British pound, it is a down close candle. So now you can see that we have a crack in correlation between candles, right? This down close candle here and this down close candle here is where we have the crack in correlation. This is called a precision swing point, right? So on a regular day with regular price action, right, the candle should, if the candle is up close for the dollar index, it should be down close for the euro and down close for the British pound. Whenever you see a up close candle in the dollar index and a up close candle either in the euro or the British pound, that is a precision swing point, as long as the point at which it formed, or the candle of which it formed, was a swing point, right? We just add precision to the swing point, right? So we'll get back to precision swing points in a minute, right? And now we'll just, give you guys something fairly easy to understand, right? So here you can remember we had SMT down here, sequential SMT, which is why we expected higher prices, and we got much of that until this candle formed, right? On this candle, you can see that we traded high, but we did not go above this high right here, right? And the closures are the same. We did not close above this candle right here, looking at the S&P 500. Within the NASDAQ, you can see that we did not trade above this high. So here, there is no regular SMT, no regular sequential SMT or anything like that, right? But here, we closed above this candle's highest close, right? So if we remove the wicks right here, and the same that occurred within the E-mini S&P occurred within the Dow, right? If we focus on these closures right here, you can see that price closed above this close. It didn't trade above the high of this candle, but it did close above this close right here, right? And here you can see that price closed below the highest close within this week, and the same thing occurred here. This is called hidden SMT, right? If it is sequential, then it will be hidden sequential SMT. So we have a cracking correlation at the highs right here. We have one in the low. We had one at the lows right here as well, and that is why you see this type of price action right now, right? So yes, this part is kind of boring. What are you showing me how to see? Hard to read price action. You're showing me how to spot a consolidation. Yes, that's pretty much what it is right now, right? So there are times when you'll see sequential SMT, then you'll see sequential SMT at the top again, or hidden market sequential SMT, and then you just see price fall back within the 50% of the range right here. Now here is another example of what occurred on the higher time frame, but this is the 1 hour time frame, right? So here, price traded above the high of this quarter right here, right? This is the weekly cycle, of course. This is Wednesday, right? This is Wednesday. This is Tuesday. So price traded above Tuesday's high during Q3 on Wednesday, right? Then we had price fall here, didn't fall below this low, right? So we broke this high, and if you look over to the left, right, you'll see this fair value gap right here, right? This is the last fair value gap that formed, on this cycle, right? Within this cycle right here. So this is the last fair value gap that formed within Q1. And then we have the highs right here below the equilibrium of this range, or just at the equilibrium of this fair value gap right here, 50%, the consequent encroachment, as Markel would say. Right, so we traded above this high. There was a correlation here. This is sequential SMT. We're going to expect price to break down. And it also traded within this gap. Right? Here, you guys can see we failed to break above Q2's high here during Q3. Price traded lower, formed a swing low right here. Right, and also price did not trade into this gap right here. Right, price did not trade into this gap right here. Right, and what is that? This right here is what I call a SMT fill. Right, so price traded into this fair value gap above these highs, creating SMT, sequential SMT. Traded within this gap right here, then just broke lower. This right here failed to trade above this side, and it also failed to trade within this gap right here. Right, price fell, signal. Now here is where we have, most of the mechanisms, being put into place. Right, this is what the Dow usually does. Right. That was just there for manipulation. The Dow was just there to create cracking correlations, right? So here we traded above this high, Q2's high, fell back, and then broke below Q2's low right here, creating turtle soup on both ends, which initiated a cracking correlation for these two other asset classes, which is why we see price fall. Then just rally higher before taking this low. This is why. Now here is where we'll go in depth of the precision swing point, and here you'll see a precision candle. So just by looking at the fibs, right, this candle right here, it's a down close candle. Looking at the S&P 500 down close candle, fibs show you where this would be the low of the candle, this red line, and this black dotted line would be the high of the candle right here. Here, this is a down close candle again. High of the candle, this line, low of the candle, this line right here. Here, high of the candle, here, low of the candle, right here, right? So, as you guys can see, this candle, right, which formed as the same time as the other candles, and I have to show you this so you see that it's real. And this is how you would actually, backtest. You go through your charts, you mark your charts out, and you just pay attention to details. So here, not only do we have a precision swing point, and this is a precision swing point within the Dow, it's not a precision swing point within the NASDAQ or the S&P 500. That's a precision candle. That's a PC. This is a PSP within the Dow, right? Swing point right here. And it is important to note that this precision swing point and this precision candle formed when? After we had sequential SMT. Right? And this is a Wednesday as well. Right? So we have price trade above Tuesday's high. On Wednesday, remember on Tuesday we had Donald Trump talking, we had those unscheduled news events. Here, this is a blank day, price traded above this high, and remember, you need to be looking at the correct time frame for these signatures within price to form, right? So for the weekly cycle, it's the 1 hour time frame. For the daily cycle, it's the 50-minute time frame. For the 90-minute cycle, it's the 5-minute time frame. For the microcycles, it's the 1-minute time frame, and so on. If you don't catch that, don't worry, it'll be recorded
and you can watch it again, of course. So yes, here you can see we had sequential SMT. There's a turtle soup here. Price traded above Q2 is high, Q3, S&P 500. Price failed to do that within the NASDAQ. Price failed to do that within the Dow. So here you can see that whenever you see this happen, right, a precision candle, that is what's we're looking at within the S&P 500 and NASDAQ, and the precision swing point is within the Dow, right? So whenever you see a precision candle or precision swing point form, because one or the other is usually there for there to be a formation of either of them, right? So the unclosed candle, price breaks below that, right, and trades back up to the area of this candle right here. That would be your entry point, right? Whenever price trades back to the precision candle, even if it's within the precision candle, hasn't broken below it yet, but it has broken below the 50%, you can still trade whenever price trades back up again, up, to the 50% on your stop here, as long as there's there's sequential SMT. Now here you can see same thing happened. Price broke below this candle, then traded back up into this candle right here, which is what the precision candle, right? Someone's asking for the fib levels, so let me show you guys real quick right now. I won't have this up for more than, I'd say, 20 seconds or so, just due to the fact that it'll be recorded, so you can pause it after and just rewatch. So there you go. Take a screenshot if you want to. And here within the Dow, you can see the precision swing point right here. Price traded, broke below, then returned back into the candle. Then we had price expand. So this is not the only thing that's here. And if I don't talk about this again, I bet that much of you guys wouldn't have seen. So here also we have what? Sequential SMT again, but it's on the lower time frame, right? So here you see this candle, and let me just take the cross here. You guys can do this for your own homework. Go dig into price and learn and see this for yourself, right? This candle right here is a swing point on within each asset, and it is a, what would we call it, a higher high within the S&P 500, but it's a lower low, well, a lower high, my bad, within the NASDAQ, and it's a higher high within the Dow. Now, this candle right here is a lower high within the S&P 500, but it's a higher high within the NASDAQ, and it is a lower high within the Dow, right? Another thing to note right here is what else is here that I haven't talked about, right? What is it? You guys know what it is. Come on. It is, let's see if anyone will get it. No. It's a SMT fill. So right here, right, and I think it'll be better to, this is terrible. So this is a SMT fill. On the lower time frame, it's harder to see the fair value gaps, but they're here. Right? So again, we'll talk about the SMT that occurred right here. After all of that occurred, at the actual top, which was right here where you see this, press action occurring. Where is it occurring within? This is the, precision candle right here. You can see this is the lower half of the precision candle. See this 50%, price traded above the 50%, dropped here above the 50%, dropped here, price traded above the 50%. Well, it's been above the 50% and it just dropped again. Now here you can see that we have SMT occurring within the precision candle,
as well, right? So here, price failed to trade above this high. Here, what happened? Price traded above this high right here, creating the SMT. And then here, you can see again, price failed to trade above this high. So yes, I hope that you guys, so this one right here, right, this lesson, it's very important to grasp, you know, in my opinion. I think if there is anything that I wish I learned, you know, back in my younger days, I'm still young, kinda. I'm 27 now, is that young? I don't know. Right. So if there's anything that, you know, I would stress people to grasp, it would be this, right? Understand sequential SMT, precision candles, SMT fills, and just put them together and watch, you know, things happen, right? All over my page, even I think there's leaked information that, you know, people are always texting me, oh, thank you for this. Thank you for this. Right, this, you know, I get hundreds of emails, you know, and I get emails from you guys, I get messages from you guys, I see your progress, and, you know, it's something that's amazing to see, which is why I stuck to just having a smaller group, right? As you guys see here within the chats, it's not that bad, right? If you have a question, you can ask, right? And I can read it, right? Someone asks, when will Oracle be released? That, you know, will take me some time because I would rather to make something that is of, you know, not at the level of that, and then release that first to see the reaction, to see who leaks it or whatever happens, right? Or, you know, it will just be that you guys will only be able to see the information that it produces, and then that will be it. You just see when it says, okay, price should go higher here, price should go lower here, and such. So yes, I hope that you guys found this useful. If you guys have any questions, I'll give you guys some time to ask some questions. If there's no questions, ask within around 3 minutes, then that will be it. What is the significance of having one precision swing point across a trade in contrast to having 3 precision swing points? I mean, there's no difference really, to be honest. Would the entry level on a fib level, would the entry be on a fib level of the precision swing point? It doesn't have to be, right? It depends on the type of trader that you are, right? Price could just return to the precision swing point. Then you just put your, you know, stop loss above it or below it if you're bullish, and then that'll be it really. You can, you know, get more precise, of course, if you go to lower time frames and look for a lower time frame SMT, which is what we just looked at, that occurred within the precision swing point. How do I know that the SMT fill is high probability? Whenever it is, you know, it occurs after there is sequential SMT, right? Sequential SMT, and any one of these assets, on any one of these concepts, you put them together, it becomes high probability, right? It's not about levels, this higher time frame level or this lower time frame level. It's about cracking correlations. That's literally what it is about, right? So yes, I'll let you guys. Precision swing point has to happen in a true open. Well, it should, you know, if you're bullish, you know, that's basic knowledge here. You buy below a true open, so there should, right? Anytime you see these things happening, price is trading above the true open, right? If it's a bearish setup, if it's bearish price action, price had to trade above the true open to go lower, and you had to trade below a true open to go higher if it's bullish, right? Hope that you guys found this useful. And with that being said, have a amazing